Okay. We'll start right away.
Yes, Mr. Balaji.
Okay. Good evening. We have a very august set of people who will be enlightening us on the global trends in internal audit today. And without losing much time, let's straight away get into the activity. I have the privilege of introducing the chairman of Kottayam branch, Sri Sabu Thomas. Sabu Thomas has been a banker all his life, and he has not been a mere banker. He has been a transforming banker wherever he has worked, he has made a mark and left an indelible mark in the places where he has worked. And with a lot of pride, we can say that he has done the same thing to Kottayam branch as well. What was, of course, Kottayam has a lot of firsts in his credit of being the first town in the country which will have 100% literacy, 0% poverty. But beyond that, as a proud chartered accountant, he has made us even more proud and then made us feel the responsibilities in terms of delivering as a committee member. So I have the great privilege in welcoming Sabu sir. And over to you, Sabu sir.
A very warm good evening to one and all present here. Respected Central Council member, Chairman and Chairman of Indian Auditing Standard Board, and my Guru, CA Charanjot Singh Nandaji, Vice Chairman of Indian Auditing Standard Board, Gyanchand Misraji, and learned speakers for today, CA Praveen Kumar Sir, CA Samit Saraf, CA Hina Kausar, and Secretary of Kottayam Branch, CA Balaji, the staff members and committee members of Kottayam Branch, the staff members of Indian Auditing Standard Board Committee, the members attending this program all over the world. I mean, our secretary is also in Dubai right now. He is attending this program from Dubai. So we are very happy to host this program for the second time in this council period, because Nandaji has very kind enough to give this program for the second time to Kottayam branch of SARC of ICA. Because even our president mentioned many times, but Indian audit is now the bread and butter of this profession, because statutory audit is losing its merits. Many areas like bank audit or other audits, this Indian audit is giving much benefit to the members. And this is having a lot of scope, like today's our subject, expectation in the Indian audit, planning in the Indian audit, and Indian audit role in ESG, because we have facing this issue in many areas of Indian audit, like wherever we go, the expectation of the management is very high, because whatever they are spending, they want the benefit in triple or 10 times or 100 times from the internal auditors. So the responsibility of the internal auditor is very high. Their area to check in the operations of any organization is in a C level of operation. So we are very happy that our institute is aiming to give a better prospect to our members in the areas of internal auditing. So on behalf of Kottayam Branch Managing Committee, I welcome all to this program, especially the chairman of our Internal Auditing Standard Board, Nandaji. Nandaji was a very good friend during my articleship at Delhi. He was very supportive to my articleship days in Delhi. And one reason I respect him, because he's a person of true spirit, true passion, and true professional in our ICA world. So the entire Kottayam branch is grateful to him for hosting our program to Kottayam branch. So I expect a good deliverance during the next 3 hours from the learned speakers like Praveen Kumar sir, Samit Saraf, and Hina madam for the next 3 hours. Over to you, Balaji, for the further proceeding without delaying much time. Thank you all.
Thank you very much, Sabu sir, for the wonderful remark and capturing the essence and purpose for which we have all come together. Now, I'm honored to introduce Sri. I'm really honored to introduce Sri Charanjit Singh Nandaji, who's a Central Council member and also chairman of this board, which is conducting the show for the evening. There is absolutely no need to introduce him because he has been a towering personality, and it is our privilege that he's part of the show today. So we are all eagerly waiting to hear his keynote address, and I request Nandaji to take over. Thank you very much, Nandaji. Please.
Thanks a lot, Mr. Balaji, the Secretary of Kottayam Branch. My very dear friend, Sabu Thomas, the Chairman of Kottayam Branch, who has brought new heights to the branch. Again, my very dear friend, Parveen Kumarji, who has been very kind coming to the board anytime to ensure that we give best to the membership. Samit Saraf, a very constant visitor to the board, Madam Hina Kausar, the officials of ISB and technical support team, and all who have come here to go home more enlightened. Ladies and gentlemen, I'm truly honored to be amongst you. The reason is very candid. You know that the Institute of Chartered Accountants of India was set up an Act of Parliament way back on 1st July 1949, when the most important document of the democracy, the Constitution, was not adopted. All of us know that the Constitution to this great country was promulgated on 26 January 1950. The pertinent question arises is, what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India when its own democratic setup was not in place? The answer is very simple, very candid, very forthcoming. They were looking for a disciplined band of soldiers to steer this country out of confusion. And that is why we are here. Internal audit, as very rightly said by Sabu Thomas, is the sunrise industry of today. We contribute not only for our clients or stakeholders, but for regulators and government when we undertake this internal audit function. More importantly, when we work towards one thought process, we understand that purposeful working, effective delivery, and more importantly, the rightful information that could be shared with the audit committee or the board. You all of us know that internal audit essentially is a management function, and therefore we all understand how we have to take it forward. Not taking much of a time, I'll rush for my keynote address, which is very brief, and then we'll have the respected speakers who would carry on with the entire process. The first speaker of the day, ladies and gentlemen, am I audible?
Yes,
My
sir.
voice is audible?
Yes, sir.
The first speaker of the day is none other than CA Parveen Kumar, who would speak on expectation gaps, auditors, organization, and society. We need to understand that there is a gap between what society expects auditors to achieve and what they can reasonably be expected to accomplish. Why that gap exists? Number one, misunderstanding of users. We undertake an audit with a different proposition, and members do it with the process which is laid down by AASB, Accounting and Assurance Board of ICAI. But users feel it is error-free, it is free of frauds. Users over expectation, yes, we have to dwell ourselves on the scope of work that is assigned to us, but over expectation normally leads to disillusionment, miscommunication of users, misinterpretation of users, and unawareness of users from the audit practice limitations. Users feels that when an audit has been done, the report has come, it means it is free of errors, it is free of each and every fraud, which is not the right thing. So largely, Parveen Kumarji will discuss on expectation gaps between the auditors, organizations, societies, and how we have to ensure that they are put at the right perspective. The second, very important, is the session by CS Samit Saraf, Planning and Internal Audit. But before then, I'm on expectation. Professional expectation gap is the difference between what the standards of profession provide and what the users desire, what the intent that this should be there. There is no reconciliation, no synchronization of it. The reason is that there is lack of sufficient standards to cover all audit practices. Each and every sphere cannot be codified. And more importantly, audit responsibilities also not put in that stance where there are insufficient standards. So largely, if we want to make both of them match, It has to be a constant endeavor from both the ends to ensure that we give the best. Now, the second topic I told you is by CS Samit Saraf, planning and internal audit. So when you plan, what are the key planning considerations? You need to understand that the business environment is changing significantly. The IT environment is changing day on day. So you need to be technology compliant. You need to be understanding the business environment so that you are able to effectively give what is intended during the course of your audit. That planning, you have to understand one thing very clearly that people normally don't plan to fail, they fail to plan. A review of movements in internal controls, risks, and financials, very, very important. The control environment is very important. The overall trends in financial emerging issues that could impact the entity and regulatory changes. Again, there are certain areas which have come on now. You see, cyber security is something which is very recent as of now. People, how they interpret the entire systems. Again, a very important area. ESG, which is the third topic, is again a very important area. Therefore, now from financial impetus, things are moving to non-financial impetus. And these have to be made amply clear, both to the users and people who conduct the audits. Annual exchange of views with external auditors, IFC team, IT auditors, etc. Very important. Annual fraud risk assessment that has to be planned earlier. Fraud can come from anywhere. The most important thing which we need to understand is how we mitigate it. Team and individual members conform to code of ethics and standards. Zero space. I say there is no second life for an auditor. We all have to be strictly conforming to the code of ethics which is laid down by ICAI or the respective body under which you are regulated. Impact of COVID-19 on audit strategy. Very, very important. These things have to be finally transformed and ultimately declared so that people are able to have the benefit of that. Now, the third topic, which is taken by CA Hina Kausar, who hails from Bangalore, it is internal auditors' role in ESG, environment, social governance issues. So you have to understand that the internal auditor should examine aspects that define the company's ESG policy. It may include high-level oversight. Oversight is very, very important today. As an auditor, you are answerable to the board or to the audit committee, as the case may be. And therefore, you need to have a proper oversight of what is happening. You have to have proper risk assessment. Risk assessment now over the past years has become more and more important and prominent because the financial health of the company is dependent upon the risk awareness, the risk mitigation it has, due diligence procedures, and awareness and implementations of actions. Ladies and gentlemen, we have to do proper due diligence, ensure that systems are in place. We understand one thing very clearly, where there is a saying in English, a proverb, that a chain cannot be strongest than its weakest point. So where the control environment gets weaker, it calls for frauds to come in. Ladies and gentlemen, we have to be very clear while exercising or discharging our duties so that we are able to effectively bring on to the entire entity and public at large what we have and what we intend to have. Ladies and gentlemen, very importantly, I would like to tell you that working particularly in those areas where the call of the stakeholders is there, where we need to focus, is very, very important. I'll not take much of your time. Really thankful for giving me the opportunity to present the keynote address. So I give on to Mr. Balaji, who's sitting in Dubai at the moment.
Introduction, and you've set the tone for the evening, sir. And the first topic is relating to ability to meet the expectation gap by Sri Praveen Kumarji. And this is a very onerous topic because when there is an expectation gap, that results in disappointment. So it is his session which will help us understand how we can ensure that there is less of disappointment. And there is no better person than Praveen Kumarji, who is a senior partner and national head of assurance in a division of ASA, which has 8 offices with is having a 700 plus team member with over 30 years of experience with spending time at national and international level. There is a book written by him, published by CCH, and he has presented himself in reputed institutions in Japan, Nepal, Myanmar, Dubai, Singapore, in various large companies. So we are definitely in for a superb session. And what is really important is he has as his hobby marathon running. So he brings in loads of experience to ensure that we survive the ordeal of marathon. Marathon is all about planning. And if you merely want to run marathon without planning, then definitely you're in for a disappointment. And it is precisely the planning that is required to bring down the expectation gap, which we as an auditor have to play as a senior person who's controlling the economy of the country, partner and nation building, where the organization looks up to you, which finally filters down to the expectation of the society. So I warmly welcome you, sir. Thank you very much for the August presence. Over to you, Praveen Kumar.
Thank you so much, Mr. Balaji. And I'm grateful to Nandaji for giving me this opportunity. I hope my voice is audible.
Very much, Praveenji. Please go ahead.
Yes, sir. Audible.
Thank you very much. So, respected Balaji and Mr. Thomas and my colleagues, Ms. Hina and Mr. Samit Saraf, I'm really grateful for giving me this opportunity to the Internal Audit Standard Board. I'll be just sharing my presentation. So during, I hope the presentation is visible.
Yes, sir, very much. Yes, sir, very
visible, sir.
Thank you so much. So the topic which has been assigned to me today, the whole topic can be discussed only on this one slide. There is a huge expectation gap, as we can see from whatever is happening in the industry today. Whenever you open the newspapers and you look at the news related to accounting and finance, you find that there are clearly, the gaps between what the society is expecting, what the organizations are expecting, and what the auditors perceive when they are carrying out the audit. So let us understand, when we are doing the audit, what kind of role we need to play. Whether we are working as eyes and ears of the management, or we are working as eyes and ears of the regulator, or we are working as eyes and ears of the society. That point has to be very clear. And the kind of audits which we do, when we are taking up statutory audits, when we are taking up internal audits, when we are taking up forensic audits, when we are taking up special purpose audit, our role and responsibility is very clearly, different in all these kinds of audit. So when we look at that old case where there were two objectives of auditing. One was to see whether the financial statements are giving true and fair picture when you are doing the statutory audits. And second objective was to find, in case there are any misappropriations. But now the situation has undergone a change. Now every regulator and every person in society, they look at the role of auditors from a different perspective. Clearly, when we are carrying out the internal audits, we are defining our scope, and that is what the next session will be all about planning your internal audits. But you need to remember that not only you are working as eyes and ears of the management in that case, but also there are responsibilities which are given to you by default, as you will be carrying out audit for the regulators as well. Of course, your role while doing the audit is like a policeman when you are doing the forensic audit. When you are carrying out the audit, whether internal audit or a statutory audit, you are looking at things from a different perspective. But when you are working as forensic auditor, you are looking to carry out the audit with the objective of collecting evidence which could be produced in the court of the law. So it is a very clear distinction between statutory audits and forensic audits as far as the theory goes. But when you are doing internal audits, when you are doing statutory audits, the society perceives that you are also looking into whether the frauds were carried out or not by the company or on the company. So it is no more a watchdog kind of a role. It is much more than that. You are, when you are doing the audit. Many times the management, when you go and pitch for internal audit or when you are having a discussion on the scope of internal audits, the management will say, okay, you are part of our team and you are working like a consultant to us. But please remember that still, there is an independence which is there when you are doing the audit. That concept of independence is very, very critical. So if you are giving them a some kind of consulting or some kind of advice, and then later on you have to do a checking on that itself, then it is not appropriate. And when we look at the quality assurance reports, or when we look at the reports which have been issued by FRRB, or when we are looking at the reports which have come out in public, when the regulator are reviewing the financial the working papers of auditors, it is very critical to understand that you need to maintain your independence. Earlier, there used to be a role of catalyst, but now, that catalyst role is not supposed to be played by the auditors. That is a very, very specific role. So when, my friends, you are doing an audit, you need to understand the purpose. The purpose of statutory audit is to give a report on the financial statements. But once you are going, doing internal audit, your scope, your purpose is to be defined by the scope, by the charter, by the audit charter, by the management. So this purpose is very critical when you are carrying out the audit. And that purpose has to be very clearly defined in your engagement letter. And the documentation requirement is such that tomorrow, if any regulator is asking you any question, you should be able to demonstrate that you carried out your work according to the scope which has been defined by the management. But if you are doing statutory audits, your scope and your role and responsibility is defined by the statute. So whichever audit you are doing, you need to understand the role and responsibility and the purpose of the audit. And that is where the gap in expectation. So when society looks at the auditor, they just understand that somebody has done the audit. As Nandaji also mentioned, that somebody has done the audit and they have looked into all the aspects. But you need to remember that your documents, your audit file should also be speaking the same language as what you have carried out in your audits. So let us look at some of the aspects in this presentation. I will be sharing with you what are the purposes, why, when the frauds are happening, what kind of signals are there, how the frauds can be prevented, how it can be detected. And then when you are carrying out your audits, what kind of reporting you should make. And then we will be looking at some of the case studies as well in order to, explain the kind of detailing which you need to go through. Many times the auditors, they take things on face, they accept the things which are the papers which are given on face, and they write in their report also. But nowadays, it is very important to keep your ears and eyes open and see what is happening, where you are, the area in which you are doing the audits. Let us look at the main area of risk, the frauds. So if you are working as a CFO, you need to understand that there are some signals which are there. And if you are working as an internal auditor, you can also catch those kind of signals. And if you are working as statutory auditors, then again, these signals are important. So catching those signals, it is very, very critical and very important. So the first signal is when a promoter is doing a ring fencing. There is too much concentration. There is too much effort going on to ring fence the promoters. That means the companies are worried that there can be action against the promoter. So that is one signal that there is too much of effort going in that direction. So if you are doing an audit and if you see that there are frequent changes which are happening in bill of materials or frequent changes are happening in your vendors, those are examples, those are the signals that something might not be very correct. To give you an example, we were carrying out audit of a manufacturing company in FMCG sector. And we realized when the audit started, we realized that their bill of material was changing almost every second week. So when we inquired from the management, they said that we got different kind of raw materials and it comes from different jurisdictions. On whenever the raw material is, changing, or we need to make a little change in bill of material. But they were working on ERP system, and it was quite strange that how such kind of frequent changes are happening. When we went into detailing, we realized that the ERP system was, tweaked in order to adjust the anomalies which they were finding in their stock. So basically, the ERP was used as a secondary method, but primary, the work was being done and accounted for, on manual basis. And wherever the differences were, they were, tweaking the bill of material. Then many times when you are doing the audit or when you are carrying out the audit, you realize that the company or the organization is relying too much on the technology, or an impression is given to you that it is everything is done by the computers. You need to be a little careful when you are doing audit in that kind of environment. We have seen in many cases when we were doing the audits, whether especially the internal audits, we realized that of course the system throws the numbers, but somebody sits behind those computer screens and with administrative rights and change the with administrative rights, they change the numbers or they change the tables. So over dependency on technology on the user level, it is very, it has to be seen very carefully. Then another signal which we find is very common, that if there are too many complaints, then there is a chance that something is not right in the area where you are working. So again, sharing an example with you, it is coming out of experience. Again, we were doing audit of a automobile company, and we realized that the company was preparing, manufacturing some auto parts. And there were too many complaints coming about the person who was in charge of accounts and finance. Sometimes there were complaints that, he is not releasing the funds, or sometimes complaints about misbehavior, sometimes complaints about non-compliances. And we were wondering what happened, in this case. Later on, we realized that the person was actually carrying out, doing some kind of misappropriation of funds. And he was involved in taking the kickbacks and all. So you need to be careful and reading these signals that if there are too many complaints coming in the areas where you are working, you need to be a little more careful. And of course, delays in meeting the compliances is something which is really, really very, very important part. So when the compliances are not happening in time, there is a possibility that somebody is looking into these numbers from a different perspective in order to manipulate the data. So that has to be seen carefully. So those are the signals you need to catch, and whether whether your scope is defined in a restricted in a particular manner when you are doing internal audits, or when you are doing audit of the financial statements, you need to see. You cannot ignore these signals, because nowadays the regulators, the society, and the management, they all expect you to bring out, in case there are something which are going wrong. And when you are looking at the financial statements, there are clear-cut signals which can alarm you. When you look at the financial statement, the ratios, if they are going down, financial ratios, that means something is wrong in the company or something is wrong in the unit. If the working capital is increasing, probably the internal controls have the issues. Or, if the working capital is increasing, then probability of, money getting siphoned off is very high. And then net worth of investments is getting reduced. That is also one of the signal, which is very alarming signal. And there is a possibility that in case losses are increased and net worth of the investments are reducing, the company might take some actions which will, which might confuse the investors. Increasing inventory is also a signal, that probably either there is a leakage of inventory items which are not coming into the books of accounts, or there is some other reason, whether obsolete inventory is getting collected or getting accumulated, and possibility of future losses in the company, that those possibilities cannot be ruled out. And then, whether the disclosures are being made, or if disclosures are not being made. We were carrying out an audit and we realized that, the management was insisting that we do not want to include this point in the report which you are going to give to the audit committee. So when I heard that, I immediately told my team to be extra careful and do little more digging into the affairs of this particular account. Because if the management is not willing to share that information with the audit committee, then certainly there is something which is bothering them. And it is very important for the internal auditor to bring those points up. Now, practically speaking, the management may not want or may want to dilute, the impact of those observations. But it is very, very, very important for the auditors to bring up those points which are bothering them. Because in future, if some regulator will look into this, they will say that why have you not picked up this point and why you have not communicated to those charged with governance on these points. So reducing of financial ratios, reducing of net worth of investments, and challenges and reduction in disclosures, they are signals. And also increasing of working capital and increasing of inventory are also signals. So when you go and start your internal audits, or when you go and start your statutory audits, you can look at the financial statements and you will come to know that there are certain signals which are there, and you can immediately address, ask your team to look with little more carefully about these areas. Now, a report to the nation by ACFE, it clearly indicated that there are fraud scenarios, and approximately on a global level, 5% of the revenue is lost by all the countries, all the companies. 5% of the company's annual revenue is lost because of the frauds. And projected global fraud loss is huge. In 2018, the amount was more than $4 trillion. The amount has kept increasing. And then some interesting data, which this report has given, that internal control weaknesses is responsible for nearly half of the frauds. And whatever survey they did, they found out that 85% of the fraudsters were never charged or never convicted for a fraud related offense. Also, they wanted to see how these frauds were detected. So interesting data is that 50% of these fraud cases were detected by means of tips. Somebody has given information to the management. And this is very, very true, that even today's date, a lot of these frauds are caught because somebody gives a tip to the management and something is going wrong here. And internal auditors, they are able to catch 15% of the frauds in comparison to 13% which are caught by the management themselves, and 7% of the frauds are caught by accidents. Now, there are two kinds of frauds. One is asset misappropriation, and the other is financial statement fraud. So, asset misappropriation is most common fraud, which means 89% of the cases this kind of fraud was reported, but average loss was lower in comparison to financial statement fraud. So, financial statement fraud was, on an average 800,000 US dollars, but only 10% of the cases were related to financial statement frauds. So more than half of the cases, the organizations never recovered anything from the fraudsters. And this puts a little more responsibility on the internal auditors to really look at the fraud scenarios carefully. So when this report was published, there was a very interesting data which was given by this report that 85% of the cases, the people who were carrying out the fraud, they displayed at least one behavioral red flag. And one of these red flags were appearing there. So, my friends, this is one slide which you can remember all the time when you are doing your internal audits or when you are doing your audits. There is a possibility that when these red flags are visible, there is something going wrong. And 41% in the fraud cases which were surveyed by ACFE, 41% preparators exhibited the red flag that they were living beyond means. And when I look back in my 32 years of experience, I can clearly see that the frauds which were caught or which came into light, the people who were carrying out the frauds were really living beyond means. So one of the foreign subsidiaries, we were doing their audit. So we realized we recently got into that company. We realized that the person who was in charge of procurement, he was, investing heavily into share market. He had recently purchased a new flat. And he was living beyond means. He was smoking very costly cigarettes and all that kind of stuff. So we used to wonder that, how come this person has got that kind of lavish lifestyle? But, when the fraud got unearthed, we realized that all this money which he was spending lavishly was coming as kickbacks from the contracts which he was giving, from the procurements which he was doing for the company. Then another red flag is the financial difficulty. So there was a situation, even in the banks, we found that one of the bank, there was a cashier who was going through very, very tough financial situation. He was able to carry some kind of fraud where he was taking money home out of the cash of the bank. Somehow he was able to manage, the dual checking system and dual key system. He was able to manage with the officer with whom he used to sign on the cash books and who was having another key of the locker. But in smaller towns or rural areas, it's more of a relationship. So this person who was going through financial difficulty, he had to take money, to pay to the doctor for his son's treatment. So he took some money from the bank, and in between, before he could return that money, the inspection happened and the money was found short in the locker room. So financial difficulty is also one of the red flag, which one can look into. Then unusually close association with a vendor or a customer is also one of the red flag. And this, my friends, you can always find that people who are into crucial seats in their office, in their place of work, If they are unusually getting close to any vendor or some, those kind of dealers, there is a possibility that they are giving some kind of favors to and incurring loss to the company. Then excessive control issues or unwillingness to share duty is also one of the red flag which people demonstrate. When they are doing something wrong, they do not want anyone else to come and have a look at what kind of activity is being done from their seat. And this is the recent bank frauds and those kind of stories which have come into picture. You can see that these things are also visible. So excessive. So some people, they do not take vacations, and this refusal to take vacation is also one of the red flags. So that's why a lot of these companies, they make it mandatory for people to go on vacations. Recent family problem is also one of the red flag, and too good to be true syndrome. So when you look at those web series and when you look at those fraud studies, you realize that too good to be true syndrome is also there. You just give me a second. Somebody is knocking, and I'll just look at. Yeah. So sorry for that interruption. So we were looking at the red flags which these people who are carrying out the fraud, they display. Too good to be true syndrome is if somebody is really not taking any advance but going out for vacations, and so these kind of syndromes are also there, which can demonstrate that how can this person have got that kind of a money. Then abnormally slow in performing routine work. So some people who deal with the different offices, and they realize that there is abnormal delay in their work, that means the person who is dealing with that matter probably is expecting something. And also social isolation is something which is a red flag. So 85% of the fraudsters, they displayed one of those red flags, which are which was also found in the survey. And you can also from your own experience, you can also see that these kind of red flags might be there in case something is going wrong. So Donald R. Creasy gave, he did research and he gave you this fraud triangle. Any fraud will happen when there is an opportunity. That means there is a knowledge and there is ability to carry out the fraud. So there is an opportunity with the person. There is a pressure that can be a motivation, or it can be incentive, or it can be some kind of pressure, which is there. And then the person who is carrying out the fraud will always have rationalization. They will have justification, why the dishonest actions were taken. So even the person, who is carrying out most serious frauds will always have a reason and will always be justified in his in that person's mind. It's in own mind that whatever that actions are being taken, they are they are justified. So the challenge is that the companies or the auditors, they need to identify that how these frauds start. What is the genesis? So maybe some error has happened in the past. It went without notice, and the person who was dealing with that situation gained in the past. So that might be a beginning of a future bigger fraud. Then top level executives might be more focused on business development and too much dependence on the executives. So they might have a lack of accounting knowledge, which might result in in these people carrying out the fraud, and the person will not even the promoters will not even come to know that. Then system deficiencies, complacency, or weak internal control, they are all they are signals that the frauds are going to happen in the future. So if there is a system deficiency, then people who are carrying out the fraud will take advantage of that situation. Weak internal controls, if internal controls are not strong, there may be a possibility that people who are aware of those will take that as an opportunity and will carry out the frauds. So there are some myths that when you are doing audits or when you are running an organization, the frauds will not happen. And this is something which is very, very important. People think that when there is a very large group, it is difficult to find who has done the fraud. But actually, nowadays, with technology, so much of technology in place, it is very difficult to, it is not difficult to identify that who carried out the fraud. Please remember that people who are carrying out the fraud will always leave their footprints, whether digital footprints or otherwise. They will always leave some some lacuna or some signal or some evidence they will always leave. So another myth is, and this is something which is very important for internal auditors or auditors to know, that once the fraudster is identified and caught and fired, problem ends. It doesn't end there. You need to really improve the system. You need to really understand. And if you are doing the audit, you need to tell the management that please identify how this fraud could happen. So identify the root cause and correct that. And also, it is very critical to understand that small limitations or system weaknesses might be ignored in the name of materiality. But those are also critical areas. You should not leave any small mistake as well. Being the internal auditor, you may find that the amount is small, but the gap in the internal controls or the system, that gap might be very big. So you need to really understand, that these things cannot be ignored. Later on, you can decide how much to report and how to report, but internal controls, when you're looking at, you should not leave these things. Setting up system can be deferred. That is something, with the startups and the companies which are growing too fast. There is a myth that, okay, we will set up the systems later, let us grow first. But this is a complete myth, because frauds can happen at a very beginning stage also. And they can be really, have a significant impact on the future of that company. Many people say that every payment is being through account pay checks, and there is no possibility of error there or a fraud there. But actually, account pay checks can be given twice to the same vendor. Account pay check can be given to B instead of A. So there are also always a possibility of fraud being there. Then many times the company says that trustworthiness, this person is trustworthy, he's been working with us for so many years. But this is, so this person cannot carry out the fraud. That's a complete myth. Many times the frauds are being carried out by the people who are actually in that close circle of trustworthiness. Robust controls and ERP system, once you have those kind of ERP systems, or when you are working or doing audit of a client which has got a very robust control or ERP system, please do not assume that frauds will not happen there. As I had mentioned, that somebody is having administrative rights and somebody can be tweaking with the controls, and there is a possibility of being fraud being there in the company. So these myths need to be understood. They need to be carefully studied, And then, one needs to understand that when you are doing the audit, you need to not only meet the requirement of the management, but also keep in mind that there is something which is expected from the regulators also, something which is society is also expecting. Let us look at some of the case studies, and these are coming out of experience, that in one case, there was a pilferage which was happening, and it was all over, all pervasive. The raw material which was coming, so there was financial leakage happening. Material was going out from the site. Suppliers who were giving material, they were sending short material, and too many changes in the bill of material. So basically, everyone was involved in that corrupt area. Even the subcontractors, they were also not giving the complete material back. There were damages which were charged by the clients, but they were not further charged to the subcontractors. There were, procurements which were happening without quotations. There were procurement from non-existent vendors which were also there. So when you are doing internal audits, or when you are doing your statutory audits, you need to be careful that those signals are everywhere. So in this case, we found that so some of the signals which I shared with you in the beginning, too many changes in the bill of material. And then the person who was in charge was living a lavish life. He was driving very nice car, and so much of expense he was doing. Then, people were careless. There were delays happening because nobody was bothered. So when we looked at those red flags, and when we, get deeper into the audits, we realized that it was, frauds were, financial leakage was happening all across. Then we found that in another case, there were kickbacks which were in awarding of the contracts. And the contractor who was winning the bids, he was bribing the project managers. And this insider was, giving them the information that how much the other people have, given a quotation. So if you remember, one of the old movies also had similar kind of situation where, the person who is winning the contract will always quote only 1 rupee less than the competitor. So it was telling the competitor that I have somebody in the client location who is giving me all the information. Then in the third case, the bids were there, and it was a collective bid. So winning bids were, too low when benchmarked against the company estimates. And they, all the 10 bids which were collected, 6 were having a very close price range, similar experience. And 5 of those 6 shortlisted bidders, they operated from the same commercial complex. So office number 201, 202, 203, and the writing, the pattern, and, the way they used, all the bids were almost the same. So the person, when they looked at that report, that those papers, they immediately pointed out that there is something which is incorrect here. So when you are doing the audit, you need to understand that the audits are done according to the accounting standards, and those accounting standards, it's not easy to understand the complexity. So there are accounting standards. There are 2 sets. One is Ind AS, which are similar to IFRS, and one is accounting standards which are issued by the institute, and there are standards which are issued under the Companies Act. So depending on the kind of organization you are in, or you are doing audit, you need to remember that these standards are also supposed to be complied with. So I was, discussing with one internal audit team, and they said that, okay, these are the financial statements. We need some expert to look at these financial statements. Even though they were all qualified chartered accountants, but they said we need to have someone who understands the Ind AS and who understands how the numbers can be tweaked in these financial statements. But please remember that, depending on the kind of organization, if you are working in banking or insurance sector, there are different regulators. When you are a listed company, when you are auditing a listed company, there is a different regulator. So all these regulators also give advice to the company on how to prepare those financial statements. And also income tax department has also brought in their standards, which are called ICDS, Income Computation and Disclosure Standards. And basic purpose, according to the framework of accounting, is to help these financial statements should help the users taking a decision. And users can be many. They can be the bankers, they can be the regulators, they can be tax officers, they can be the management, they can be investors, they can be your joint venture partners. So as an auditor, you need to have an understanding which environment or which framework the company is working. Now, you need to understand there are some basic principles of audits. And when I'm talking about audits, all kind of audits, you need to understand that you're dealing with the client data, and confidentiality is something which is basic requirement. Any auditor will need to have a confidentiality in place. Skills and competence, that is very critical. You need to have your team which is aware of the industry and the atmosphere in which this company is operating. All the audits are nowadays supposed to be done on the risk-based methodology. So you need to understand where are the high-risk areas, and those areas need to be picked up first, whether you are doing whichever audits you are doing. And that's how you will be able to meet those expectation gaps. Because when you are doing internal audits, or you are doing statutory audits, or you are doing forensic audits, you need to understand that your focus has to be the system and the processes. And you need to be understand that who is taking part in the decision making. And recent case, when regulators are looking into those top CEOs of the private banks, they are also questioning the kind of decision-making process. And you need to be careful that you are sensitive to multiple stakeholders' interest. So your documentation should very clearly demonstrate, and we will have next session on planning, that how do you plan, what was your scope, what was your, what is the business of your client. And then you will need to do your field audits and your audit discussion. Then your report should come out after having a discussion with the process owner, with the CFO, with the CEO, and then only you can go to the audit committee and make a presentation. But your approach has to be clearly understood, to first clearly understand the process. And then you need to have a feedback also, and cross-functional opinions also required. You need to, like I mentioned, that somebody who is expert in NDS or expert in tax matters or expert in manufacturing process, and then only you will be able to do, justify the audits which you are doing. And of course, with a lot of technology in place, you need to involve the tools also. And once you are doing the planning, only after that you'll be able to do the analysis and sample testing. Your reports, when you are doing internal audits, need to be clearly demonstrating what activities have you done. There are different formats which the companies are using, which the auditors are using. But basically, your presentation should be in such a manner that within one snapshot, a person can understand something is not right there. There is one amber dot, so something needs improvement there. All other dots are green. So it's very important to have a visual, and your scoping when you're signing off your internal audits or your scope of work. You need to clearly define which areas you will pick up, which location, and what will be the sub area which you will pick up while carrying out the audit. And nowadays, your risk control metrics has to be very clearly defining what are the risks identified, documented, and what are the controls these companies applying. And you can always do a process flow chart also, which will identify wherever the red mark is there, you can see that there is a control weakness or a possibility of control weakness. So there are some controls which the companies can use, which could be, to prevent the frauds. And one of the main area is the surprise audits. So the companies, workers, or the process owners, if they always have a fear that anytime the auditors can come, the surprise audit can come. So they will always be careful. And also there are mandatory vacations and segregation of duties and fraud awareness training. All these kind of actions can be taken. So this is my last slide where, we discuss what are the challenges. So when you're doing audits, your main challenge is that your data is always, always questioned. Whatever data you have collected, they will always say that this data is not correct or not complete. So you should have looked at the data from a different perspective. You should have taken the complete business scenario. Other challenge is that every time something you find out, they will say, oh, there was a process gap and some kind of process shortcoming was there. And ultimately, you will come to know that there is a pressure from the top that they do not want this point to be part of your internal audit report. And then they will always say that, okay, this is our industry practice. So what do we do? So you need to be careful. Your main challenge is how to draft your observations. So once you are clear that your observation drafting is not pointing out fingers on the people, then people will be more acceptable, or they will be accepting your reports much more. So this is all. So I think I have completed my time which has been given to me. So thank you very much for your hearing, and I hope it was slightly useful. And thank you very much once again for sparing your time on Saturday evening. So over to you, Balaji.
Thank you very much, sir. I'm reminded of the innings that when Mohammad Azharuddin plays, generally it is said that the entire innings is a highlight. You cannot take your eye off even for a single moment. So your session was nothing short of a brilliant display of information relating to how to... Hello?
Yes.
Yeah. So how to meet the expectation gap and what ails the system in terms of our approach, how to overcome that. So we are all much better in terms of our awareness on the subject, and we know that we have a long way to go, because what we heard from you was an outstanding expert session from you, sir. Thank you very much, and probably we will have a lot to throw back in terms of the... Thank you very much, sir. Over to the next session. I have the great honor in inviting Sri Saraf ji, Samit Saraf. Samit Saraf, unki jo topic aaj hai, it is basically for planning. And I also wanted to add a quick note. There is a movie called Minority Report where Tom Cruise plays the role of a future cop whose main job is to prevent a crime. So maybe within the organization, we will also have something in the planning part where in terms of our ability to foresee, or a sir was saying in terms of the odd behavior of the finance guys. So it's very evident that something is going to happen in future. So probably we will now hear from Samitji in terms of the ability of the system to throw up possibilities of fraud before that happens. So a quick note on who Sri Samitji is. A fellow member, is a diploma holder in management and accounting from SEMA, with 10 years of post-qualification experience as a partner in Kirtana and Pandit LLP. He has been the managing committee member of the Bombay Chartered, prestigious Bombay Chartered Society for the current year, and various other specific aspects in terms of being the convener of internal audit, member of internal audit committee of WRC. He was a core committee member of BCAS for the past 8 years, which speaks volume of his talent and the recognition he has been given from BCS. He has been regular contributor and speaker at the prestigious BCS forum in terms of ISAB, WRC, and across the country. So I don't want to just delay the whole thing. Over to you, sir. We are in for a scintillating session on planning from Sri Samitji. Over to you, sir.
Thank you. Is my screen visible?
Yeah, visible, sir.
Thank you. So good evening to my fellow panelists, the members attending the session today, ladies and gentlemen. I would like to thank Nandaji and the team at ISB for the opportunity to be presenting at today's forum, and with a topic that is so critical for any internal audit engagement that we perform as chartered accountants. Thank you also to the Kottayam branch of SIRC for hosting me as a panelist. The past session, Parveen ji has delivered an enlightening session for us and has set the tone for today's program. And I hope to add some value over the next 45 to 50 minutes from my end. My topic today is planning an internal audit. As you know, internal audit in today's world has moved from being a traditional compliance activity to now having a risk-based audit approach. The large corporates typically have their risk registers, the internal audit charters, reporting to the audit committees, in addition to established processes and systems. But when it comes to the emerging corporates or the SMEs, the internal auditor may have to rejig his or her approach, audit methodology also. There may be a need to tweak certain items of scope as well to meet the demands of such companies in order to stay relevant in this engagement. Risk assessment has now become a critical aspect while planning the internal audit in today's world, especially the ever-changing times over the last 2-3 years that we have seen. Especially in today's situations which are beyond the promoter's controls, the SME may fail to mitigate certain risks and may stand to lose on various grounds. Hence, our role becomes very important. Us as internal auditors, we play a vital role in ensuring the clients ride the tide by envisaging the future risks, and we can communicate better by virtue of being the to-go person for the promoters, the board, and the management. All of the above can only be achieved if the various stages of internal audit engagement is planned efficiently. And my session today is the first one, which is planning. So without much further ado, we will begin. A snapshot of what we will be covering today. I specifically want to concentrate on the emerging corporates because I believe a lot of the audience would have emerging corporates or SMEs or MSMEs as their clients. So we'll be looking at what are the key features and critical focus areas that are specific to such companies. We'll also keep in mind certain important aspects which impact SIA 220 and SIA 310. We'll look at some important aspects of the internal audit charter. Next, we will move to what are the expectations from the boards, from us internal auditors. We'll look at the process-based approach to internal audit. What are the various pillars that are involved? And then we'll be deep diving into the various steps of planning an internal audit, which is today's core session. I will end with certain challenges that we face as internal auditors, again, from my experience. And lastly, some of my tips, which I have learned over the last 8-10 years for value addition that we can provide as internal auditors. So if you were to look at what are the key features of emerging corporates or SMEs, they are mostly promoter driven. If you were to see, the power at the top is concentrated in the hands of a small group of individuals, mostly family, that you can say. In such places, each process within the company, be it purchase, be it finance, and other such processes, is headed by a member of the board, that is of the core group. Limited segments are there within business, which makes it manageable of sorts. Also, limited internal controls would be there as a flip side of having limited segments. Here, there is a possibility of overriding by the management because of legacy practices that they have developed over the past few years. And there may be a situation where there are no SOPs or manuals written per se, but they would know the practices by heart. Such companies are also open to outsourcing certain specific professional functions, one being internal audit. So what would be focus areas for chartered accountants like us? In human resources, we could look at how retention is done, how the skill set is mapped, what are the pay grades, are there various scales for the same, what are the employee benefits that are being offered, are they mapped with best practices across the sector? Coming to regulatory compliances, many a times we may see that companies may fall short on the various updates that keep coming from various regulatory authorities. We've seen GST and many such laws, many amendments keep coming. But does the company have the mechanism to keep track of each added compliance in the year? It may be difficult, and that is where internal auditors can play a major role in ensuring compliance. Financial matters, we could look at aspects such as capital constraints, working capital constraints. There may be some cash flow issues, gestation in receipts from their customers, which may lead to adverse issues in debtors management. So we need to be knowing that these factors may impact clients like these. Coming to technology, there may be lack of IT infra per se, maybe no firewalls, or they may be susceptible to ransomware, malware attacks by not using rather softwares which are licensed. Coming to software licensing, again, absolutely critical item in today's world that can absolutely ensure that you are safeguarding the client. So if you come across certain unlicensed softwares where you are doing internal audit, my suggestion would be to bring it out. Using of tools, AI, ML is something that is the need of the hour. So how can we help as internal auditors by bringing certain Excel tools or AI, ML tools or audit tools? Strategy, we can look at demographics. You can do a study of where the company is operating, where the sector is operating. Look at peers of this company, what they are doing. If you can bring some best practices in, those suggestions can come from our side. Mapping the customer base, is there a lopsided, falling to a particular customer, or a lot of over dependence on one or two customers? That may be an area of risk if things were to go awry in the future. We need to ensure that there is no such risk, or at least bring it to the notice. And newer products. Are we looking at newer products in today's world as from our research? So if you were to look at an example, companies that are into automobile manufacturing, for example, and it has been an oil and gas industry so far. But now with EV, there may be some engine parts or some parts of the car which may undergo drastic change, or they may not be used over a certain period of time as the world moves towards EV. So is there a research and development mode in the company? Is strategy helping see what the next 5-year, 10-year plan is? So here is something that we can bring our expertise to the board and at least make them aware of where we stand. Benchmarking with industry standards, reading industry reports. We should be going through what our client sector is doing, where the world is moving towards, and if there are up and downs, or if there are going to be dynamic changes, we can bring it as part of our various process runs, be it order to cash, be it procure to pay, be it finance, HR. We have ample opportunity to bring them the perspective of the various companies in their sector. Looking at various key points of SIA 220, which is conducting overall internal audit planning, and SIA 310, which is planning the internal audit assignment. From my experience, there would be 2 levels of planning. The first one is where the annual internal audit plan is prepared 9 out of 10 times at the start of the year, and it is presented to the board or the audit committee, as the case may be, for approval. The other side is where certain departmental audits are outsourced or co-sourced to audit firms. In this case, the internal audit function would be in-house. This would apply more in the larger companies, and where only specific processes or departments are audited by external firms, maybe for independence being one of the main reasons. And then our reports are presented to the chief audit executive and then onward to the board. So this is a co-sourcing engagement. Us as internal auditors have to plan on these 2 levels. What is the essential documentation requirement that we need to ensure at this stage of planning? We need to look at what the information regarding the business of the client is, what business your client is into, what are its operations, what systems they are using, what processes they are using, do they have any past issues as a company or within the sector, and recent impact to the sector. So if you were to see the last 2-3 years, because of COVID, there has been an impact on multiple sectors, and now many sectors are out of it. So there has been a dynamic change as to where the world was till 2020 March and where the world stands between the last 2 years and where it is today. So we need to do an ample study or background research before we enter any new client, and that will only help provide relevant advice as internal auditors to your client. Next, we need to essentially document the audit universe. Now, we'll look at it in depth in later also, but I'll just give you a snapshot. The audit universe is basically a summary of your core and support processes that will be covered under the audit plan in the year. The auditable units could be the process, could be a location, could be a department, could be an entity within the company. So that is what auditable units is. Essentially requires to be documented as part of the planning exercise. You may have meetings, you may have discussions, interactions with various key stakeholders, which means that from the board, it can go up right to the executive management, the CXO level that is, and you may the process owners also within these departments. Whenever we're having discussions, it's very important to summarize those meetings and have minutes basically which are documented, which is only going to help us when we start the audit exercise as to what the expectation is. Like Parveen sir has said, there should be no expectation gap. So summarizing our discussions, summarizing our meetings, and sharing it with the auditees is going to be absolutely important to ensure that there is no expectation gap. Risk assessment documentation, I'm sure all of you know the importance in today's world. Are the risk control matrices documented? Are they tested? Is IFC actually tested or documented? This is something that we need to ensure at the stage of planning. If not, we'll have to use alternate audit techniques to ensure that we are mapping the process, we are reviewing the process as aptly as possible. What are the available resources available with us in the team? You may want to look inward firstly. If you were to take, for example, the HR department, do you have adequate knowledge within your team who knows the labor laws, who has prior experience of doing HR audits for other clients, be it the same sector, be it other sectors? If not, you may want to use functional experts to give more relevant insight into the function or into the process that you're auditing. The overall internal audit plan duly approved by the board or the audit committee, that has to be documented. So that takes us back to the start of this slide, that the plan has to be communicated clearly by the board to us. It has to be approved, and we will be mapping our progress in the year with the processes that we audit. Coming to the internal audit charter, a brief definition is a formal document approved by the governing body, which is the board of directors, and agreed to by the management. It usually exists when the internal audit is managed in-house. So there is an in-house department led by a chief audit executive with team members, where they are auditing various segments, various processes within the company. What are the four main aspects that we need to look at when a charter is shown? What is the internal audit's purpose within the organization? What is the authority given to internal auditors? What is our responsibility and what is our position within the organization? These four aspects have to be aptly defined in any internal audit charter. The IAC also provides a blueprint to the organization, how us as an internal audit function will operate, what are the reporting lines for the chief audit executive, who is the upward reportee, who are the downward reportees. So functionally, we may report to the audit chairman as a chief audit executive or internal audit firm. And administratively, we report to the management. We'll also look into these aspects in depth later, but these have to be aptly defined and documented within the IAC. Our responsibilities are documented next. Our reporting lines again, is there a conflict of interest? Then what steps we should be taking? What are the modes of risk assessment that should be followed? What is the internal audit department's access to data and premises that we are allowed? All this is documented in the internal audit charter. Next, the charter also lays down the approved internal audit plan. What are the process lines to submit the same to the audit committee? How it is planned to be implemented over the course of the year? Is it monthly? Is it quarterly? Is it half yearly? And next, what are the reportings of the material deviations? So many a times there may be flash reporting that is advised. So is this mentioned in the internal audit charter? If material deviations are coming, we will definitely be reporting that to the audit committee. But if it is a very critical item which cannot wait till the audit committee takes place, then a flash reporting may have to be done. The flip side of the internal audit charter, that is when it's done in-house, is the engagement letter. So if you are part of an internal audit firm as a chartered accountant, we have signed, or we always sign, an engagement letter with our clients. This is none other than the flip side of the internal audit charter. So both aspects and both contents are very similar, and that is what we should be following as part of our documentation. Next, we are coming to what are the expectations from internal auditors. So from experience, I've broken it down into 3 parts. The first is the audit committee. The audit committee would give certain amount of time to internal auditors, which is not a lot because there are many agenda items. So we require to be very crisp in our reporting. We need to bring the critical aspects that the audit committee needs to know. One being the assurance on effectiveness of controls, the control framework. We cannot be presenting the entire report, hence an executive summary of these high-risk critical items need to be presented as to what the issue was, what is the current status, and whether it is solved or not. We report all high-risk issues, as I said. From experience, again, I have seen that statutory compliance is a very important aspect that audit committees stress upon. So 100% compliance to the statutes that apply to your client or the company, we are expected to mention or comment upon and give an assurance. So if not covered in all quarters, one of the processes that you need to cover in the audit universe is of statutory compliances. And that's basically doing a health check of the statutes that apply, be it labor law, non-labor law, or the Factory Acts, etc. The next level is of the C-suite level, which is the CXOs, the CFO, CEO. They would look at value addition, that is new findings from each audit that we are doing. So if you do, suppose, an order to cash audit in Q1 of the financial year 22-23, and we were to take up the same audit in the next year, looking at similar observations may not go in our favor, because that also shows that we have not found the root cause and not mitigated the risk when we found it the previous year. So it's very important that we provide value at this stage, and that is the expectation of the executive management. Emphasizing on cost control measures. Now, this can be cost control, cost optimization, pointing out revenue leakage, anywhere that any item that can be tangibly measured, the C-suite level would definitely emphasize upon. Reporting observations from our side would be sometimes or many a times mapped to the audit fees that are being paid to us. So if our audit fees are well within the benefits or the cost control measures or the revenue leakages that we have pointed out, I think we have done our job well. Next would be to mitigate the root causes and find out the root causes, point it out, close the loops so that they are not seen in the ensuing runs. This would definitely go in our favor as internal auditors. The last stage of the process owners, who are actually running the processes within various departments in the company, they would want you during the walkthroughs definitely to know the working constraints that they are facing at the shop floor level. And many a times there may be a request to avoid reporting issues that have cropped up during our audit, because it may bear down very heavily from their seniors on them. So as internal auditors, we need to exercise our professional judgment at this stage. We are midway through our presentation, and I would like to take you through how the process-based internal audit approach is. There are 4 major pillars. Now let's take a case of you're doing the Q3 audit, that is October to December. We'd start with the planning. So at this stage, you would define the audit objectives, the methodology that you are going to follow, explain the same to your team. At the next stage, you would be sending an audit notification letter to your client that this is the audit process that I will be picking up as part of Q3, which is in line with your internal audit plan. At the background, you would be gathering information about the process, about the company, sending the requirement list. So the research begins at this particular stage. You are identifying risks. So at this stage, you are also required to study the RCM, the risk control matrix that is already on the record, which will aid your understanding when you are actually doing the audit in the next stage, that is field work. You may want to create the audit program, document the same, so there are no expectation gaps between you as a leader and your team, which is actually going to be working during the field work. Once these items are taken care of in the stage of planning, you will move to the entrance meeting. At this entrance meeting, you as an internal audit firm, your team, and the audited department, which will consist of the head of department and process owners, will be part of this meeting. We'll be discussing the planned audit, the days that will be required, what is the scope of audit. The scope will be discussed. If there are any changes suggested, the same may be amended in the scope. And at the end of this meeting, you sign off on the scope. and send it out as way of an email so that there are no obstacles in the ensuing stages again. So what we are trying to do with every stage is we are trying to curtail the risk of obstacles that may impact our fieldwork, may impact our reporting, and impact the finalization of the audit. Next, we are moving to fieldwork, which is the second stage. Now that the audit has begun, we'll be conducting walkthroughs, conducting interviews at the start. We'll be reviewing these SOPs. You'll be reviewing the manuals, the process flowcharts, which is part of the documentation. The list of requirements that we share with our clients, we are reviewing the data, which may be in the ERP, which may be outside of the ERP, and the various processes, which are again manual, which may be automated. So this consists of the main critical part of the 4 processes, which is fieldwork. We may apply a sampling logics. If you have an audit tool, the sampling logic is different. Else you, as an internal auditor or a chartered accountant, may apply the sampling logic that applies best, made random, be it judgmental, etc. Once the fieldwork is over, we call for an exit meeting with the auditee. We'll be discussing our observations with them, threadbare, one by one. If they have any questions, any concerns, any requests for looking at additional data before we freeze an observation, that may be taken up at this stage. So it is a discussion on each of the observations that we brought out, the implications and our recommendations. Once accepted or validated by the auditee, the corrective action plan is drawn, which may be in the form of a management comment and the target date by which it will be corrected or remediated. We then move to the third stage. At the start of it, we are providing the draft report, which is a result of the exit meeting. The corrective action plans are frozen now in the draft report, and it is being circulated with the executive management level. Once it is validated and accepted, we will then be issuing the final report, which will be going to the promoters, the board, and in the last stage of follow-up, the action taken report, which is the ATR. If many of you are doing internal audit, you will know what an ATR is. We will be mapping the closure of all these open audit observations by way of an ATR over a regular basis and reporting to the companies. Before beginning the next quarter, which is a different area that you will be selecting, the follow-up stage will come in, where you will be checking whether any of the older issues of the past quarter are still open, and if open, what are the reasons? Do you need to retest any any data? You need to review any processes or documentation that has cropped up as a result, and accordingly close it in the follow-up stage, and only then you move to the ensuing quarter and then begin the same process over and again, which may be for a different process. This is broadly the process which is followed by most of us. This is what I personally follow, and which is why this is the reason we spent some more time on explaining the 4 pillars. We'll be now moving to the core part of the session, which is about what are the various steps that we perform in an internal audit. Looking at the risk-based audit approach, there are broadly 6-7 processes that we look at. Understanding the organization, which is seeking the business information of your client. What are the sectoral updates? What are the industry updates, new happenings, insights that are coming in? Background research by way of industry reports, news article, RSS feeds. You may want to pull a lot of data that impact your company and the client. What is there any material impact due to external factors, be it war, be it change in political scenario? There may be various reasons that are out of the control of your client, which may impact the business of the client. So a lot of reading, a lot of research done by the internal audit firm will help prevention better than cure concept coming into the picture. Identification of audit universe, which, as I previously said, it is core and support functions that consist. Risk assessment, which is timely identification of risks that apply to the business. How are we mapping the same? Audit planning, which will look at 3-4 important aspects. How are you allocating resources for this audit? What are the skills that are required for performing an audit? If it is, for example, a manufacturing company, you're looking at production audit, you may require a functional expert on board. You may have it within the team, or you may seek specific support for this particular audit, but having a functional expert always helps for insights. What are the timeframes that you're using for fieldwork, for reporting? Communication is very important on those grounds, and creating an audit program, audit plan. Audit plan being discussed with the management. At this stage, you would solicit feedback from the management. If there are any suggestions with regard to rejigging certain processes between quarters, this may happen at this stage. Having the board audit committee approval will come in as part of one of the steps. And lastly, implementing this audit plan, that is conducting it as per the plan at the start of the year and mapping the progress all throughout the year. From experience, again, I would like to say that assessing risk as part of the third stage above should be done at least once a year. Very critical processes may be taken up once a year. Not so critical processes which may be support may be taken up once in 2 years and so on. But this should be documented and followed and tested as part of the internal audit function. If there is a requirement to update the audit plan during the span of the year, again, maybe due to external factors, that may be required to be done to stay relevant and to ensure that we are not going hayward or wayward during the particular year. Step 1, understanding the organization. Documentation such as the organization chart, what is the hierarchy, what is the authorization matrix. Now, if we are looking at the emerging corporates or the SMEs, whether this is documented or whether this is only as part of legacy practice. As auditors, we should push and stress on the fact that these items should be documented. They may be followed for a various span of years, but during our tenure, I do want to mention that we need to stress that the same should be documented and included as part of the SOPs. Is there a vision and mission statement of the company? And if yes, whenever we are doing audit, is the company progressing on this same or not? We may want to bring it out as a discussion with the executive management or the board when we are having discussions, but documenting the same is very important. Does the client have the SOPs, the manuals, the process flows well documented? If there is a revision done year on year, is the latest version and the latest revision date mentioned on such SOP? These are some small data hygiene aspects that we need to check as part of our audit, because no audit will start without the SOP manual or process flows being in place. If it is not in place, please bring it out as an observation because you will only map the practices when they are documented. Reviewing past reports from auditors. So for example, you are starting a new client this year. Knowing what the past reports have spoken of, if there are any pending issues, any nagging issues that have troubled this company for the past few years and remained there, it can show that root cause probably was not done properly. So it's very important that we request for access for past reports, especially of the areas that we are auditing, and read the same in depth to ensure that we are not seeing any repeat observations during our tenure. Industry research reports, you can get it in public domain. Internet is wide, but do ensure that you are reading the relevant research reports only to get an understanding of the company and the sector. When you look inward, annual reports and filings made with the government authorities, it is frozen because once it is given to the government authorities, no changes can be made. So definitely we should be going through the director's report. We should be going through the annual report of the clients to get an in-depth understanding of where the company is headed. Next, when you're going to be picking up processes during the audit year, which may be O2C, P2P, finance, HR, you have to understand the business process in detail before you audit. If you do not understand the business that the client is in, it will be a very superficial audit. It can be called a traditional audit or compliance audit or transaction audit, so to say. So if we were to step up in our service, in our offering as an internal auditor, it's very important to understand business. News reports, RSS feeds, press releases I've already mentioned that can be clubbed with the industry research reports. So please get your hands on everything that is available in public domain. This will only aid your understanding and provide value add during your audit for the client. Interacting with stakeholders. Now, at this point in time, there will be interviews, meetings, walkthroughs, whatever the nomenclature may be, but it's absolutely important to be interacting with stakeholders and not working in a silo. We are the eyes and ears for the board. So by whatever mode we are getting information that is relevant to our engagement is important. It may be through walkthroughs, it may be through analysis, it may be through any items, but interaction is something that we cannot skip. Who will you interact with? The key members of management, which can be your executive management, the CXOs. Interacting with the promoters, board, audit committee, please seek an audience to ensure that you are knowing their expectation from the internal audit function. Again, takes me back to Parveen sir's session about expectation gaps. I'd like to stress on it that we need to interact with all these levels to ensure that we are mapping our service to the expectation that is laid by these various levels. Walkthroughs with process owners will definitely happen when we start the field work. Very important to do is documenting the existing practices. So if at all the client does not have a documented SOP, manual process flows, when we document the walkthrough activity, it will go through in a way that we are documenting something. It's better than nothing. So please document what legacy practices are being followed, because the next step will be then to formulate an SOP or a process flow document. Moving to step 2 is the identification and the creation of the audit universe. As previously said, it could be a department, it could be a process, it could be an entity within the group, it could be a function or a location. So if it's a multi-location company, it could be one of the locations also. Core processes for example, a manufacturing company could include order to cash, which is sales, procure to pay, which is purchases, inventory, which is stores management, also called. Logistics could be one of the departments. Additional department here that could be production. So whenever you take up production in a manufacturing company, it's absolutely important to understand the ambit of how the company operates. If you can get in a functional expert from that particular industry to help you as part of the audit team, nothing like it. You'll be definitely getting more insights as an audit team, and the output that will be coming as from our reports and a presentation to the topmost level, which will be of much more value add than you can do as just chartered accountants and looking at we have certain limitations. So we can involve functional experts and make our function very strong. What could be support processes for a manufacturing company? It could be finance and accounts, it could be HR, IT systems. So if most companies in today's world are operating in an IT framework, which is an ERP framework. So looking at the hardware aspects of the company, whether ITGC is looked at properly, what are the software compliances that the company has done. Has the company done anything on the grounds of data privacy, data security, data confidentiality? Because data is the new oil, as they say. So for any company, be it in any sector, IT systems have taken a lot of utmost importance, I would say. And us as internal auditors, we need to be providing services going forward in this area. Statutory compliances, which will include labor laws, the finance acts, and certain specific acts like Factories Act, industrial disputes, as may apply to your client company. We are expected as auditors to cover especially the critical clauses within the framework of the stat compliances and bringing it to the notice of the topmost management to ensure there is compliance. The new in the new age concepts such as ESG, health, safety audits, which are qualitative indicators, we are in some engagements also expected to report or to comment on such qualitative factors also. Over the period, we've been doing a lot of quantitative factor audits where we're looking at and quantifying the findings that we have. But as we proceed, I'm sure we'll have to look at a lot of qualitative aspects and bring it. This is only to remain relevant because the companies require this kind of advice, and we are very well poised as internal auditors to be that advisory function to the board where we can bring these advices to the best of our capacity. We'll move to step 3, which is risk assessment. The risk control matrix for each of the processes of the auditable universe. We need to identify the most critical risks, allot the critical risk score to the same. What is the likelihood of this risk materializing? What is the impact it will have? And accordingly, we are doing a testing as part of our internal audits. We are required to test the risk controls that are documented as part of the matrix and reporting on the same. So if you are looking at a particular control in the risk control matrix and you see there is probably deficiency that can materialize into something big, do bring it out and try to strengthen and suggest remediation measures to make it more robust. What are the various risks that they may occur during the audit? It can be operational risk that impact the business of the company, financial risk, which has direct tangible impact on the financials of the company, compliance risk, which is more so to do with non-compliances with statutes. Next is IT risk. It can be various levels. Basically, it can be an ERP extraction issue, which is a smaller issue, to a larger issue, which can be a ransomware or a malware or a firewall issue also. The reputation risk, is a risk that may impact the brand image or the goodwill of the company. So if we are looking at during the O2C audit, for example, this can come up as a risk, and we need to be aware that if we do come across, we need to bring it out as well. Fraud risk is where I think Praveen sir has spent enormous amount of stress on the same in his session. So fraud risk, as internal auditors, if we are finding out, do bring it out as an indication, because as internal auditors, we are not forensic auditors, but at least we can bring out the indication that this may happen in the future. So it's better to prevent at this stage itself. So these are broad risks that we come across as part of our internal audit engagements. During the planning stage, as internal auditors, we are required to consider inputs from various stakeholders in the organization, and accordingly, we finalize the plan at the start of the year. It's signed off by the board. The auditable universe, which is the core and support processes, are part of this audit plan. It's very important to define the frequency of the audit runs. Now, the plan will be basically a matrix which will have the frequency. It can be monthly, quarterly, half yearly, as the case may be, and as expected by the management. When it comes to the scope of each of these processes, let's ensure that we are exhaustively preparing the same, again, from what the management explains to us as part of our summary of meetings that we are holding with them, or as part of our own research as to what scope should be defined for these particular processes from our own reading. Please notify the audit department in advance. Now, why I'm mentioning this is, if there is an expectation gap as to if you don't let them know, the field work will be between 10 to 12 days, and suddenly it goes to 20-25 days for various reasons. There may be a case of an obstacle that would come from the audited department saying we don't have time or we don't have the resources to now be interacting with you, and we have to get with our own work. So it's very important to let them know this is going to be the estimates that we have at the outset, so that there are no obstacles on these grounds at least. Emphasis of root cause analysis. As internal auditors, when you are looking at any observation or findings as part of the audit, look at it from a root cause analysis. Now, there are three that come to my mind. It could be due to people or HR. It could be due to a business process anomaly, or it could be due to IT. Every observation can be classified in any or all of these particular items: people, business process, or IT. Looking at why a particular issue occurs, going to the source of it and trying to remediate that particular reason will ensure that you're looking at it in much detail, and there is a lesser chance of the same occurring the next time you pick the same process for audit. We are sometimes expected to explain or show as to how we plan to approach the 100% compliance with regulatory requirements. Now, here it starts from basic research of us knowing which statutes apply to the company, which are the laws that apply to the company, reading those particular laws, listing down the critical sections that have penal implication, financial implication, etc., to the board, and how we plan to cover it as part of the year. You may spread it across the year, or you may take a particular statutory compliances process run as part of the audit plan, as the case may be. But it's very important, because this will only safeguard and help you ensure compliance and report to the audit committee or the board with respect to effectiveness of these follows. What are the overall time span of the audit, right from the planning stage to the last stage, which is the issuance of report? It's very important for us auditors to have an overall control over these stages as we progress the overall time span, because it can, if it escalates, it may become onerous. So we need to know our costs, what remuneration we are going to charge, and map it accordingly. And please keep a mid-audit review as to ensure that you are not going onerous at any point in time. Yeah, step 5 is about the audit plan discussion with the management. So once we have drafted the plan, it will be provided to the board. They will review the same. It will be approved and recorded in the minutes. Please ensure that the same is done. As internal auditors, we can give an assurance to the board on the various important processes that we are covering. So when we have suggested certain processes, obviously we have done our research and it has been validated by the board. So it's a two-way street. And as we cover the processes as the year progresses, we're also expected to give the mapping of what we had promised and whether the process is covered within the time frame that we have promised. So do include that updated plan and the status as part of your audit report or presentation. What should the audit plan consider? Input from stakeholders, which we've already seen. The frequency and the timing of these audits, again, we've already seen that as well. Resource allocation, how we are planning to build our team, what is the hierarchy? It may be a partner, then the audit team lead, which can be a manager. Then we come down to the articles and the audit assistants. So how we are allocating the entire audit and distributing the same within the resources that are available with us. It's important at this stage. Skills management in line with the complexity. Like I previously said, if it's a functional audit, it's a production audit, or it's a very specific to a manufacturing company, or functions that are not very easily understood by us chartered accountants, you may want to involve experts. So if the assignment or the scope of it allows you, this is that particular stage where we need to judge the complexity and plan the resources accordingly. Have a realistic approach to the engagement. Please do not promise the sky, because our word is what we have as professionals, and that is what helps us grow and helps us proceed and keep our value. So let's have a realistic approach at each stage, and you do a mapping very properly as to what the client expects and what you can provide. Now, maturity of the processes in the organization may differ from company to company. Some companies may use an ERP which is not very robust. Some may use an ERP which is very, very robust with a lot of controls that are set in. So our job as auditors has to be mapped, and our audit plan has to be prepared in such a way that we are flexible to the maturity of these processes within the organization. It is not one size that fits all. So as auditors, we need to exercise that judgment as well. Step 6 is about the board AC approval to the plan. The audit plan is shared with the HODs of each of these business processes as a formal communication by the topmost management. Each of these HODs are aware as to what the internal auditor's role is going to be when we are going to be picking up that department for audit. So communication lines have to be absolutely crystal clear at this stage. Now, if you recollect, in the past, I have mentioned that there may be a requirement of amending the audit plan due to internal factors or external environmental factors. Now, what could those be? There may be changes in laws and statutes that occur. There may be changes in the regulations or the industry scenario. At the start of the year, it was in position A, but during the year, there has been a material change that has impacted the sector, has impacted the company, which has now required you to rejig your plan. So this is an external factor that you had no control of. Change at the leadership level. The management has changed. The approach has changed by the new management, and which does not allow you to go on with the audit plan that you had envisaged and approved at the start of the year. So mid-year, you may require to amend the audit plan and get it approved by the new management. If an acquisition is done, or if a business segment is sold and it was part of your audit plan at the start of the year, if it is sold, there's nothing to audit, so you may need to remove and then add a new process in its place. Similarly, if a new business is acquired, you can provide the service or rather include the area of doing a capex audit, because if a new acquisition is done, there is capex that is laid out. So can you add it as an area? Yes, you can suggest the same and add it in place of another process. Newer risks that were unforeseen at the start of the year when you were planning the audit plan, basically. During the year, you have come across these newer risks. Please bring it to the notice of the board, the audit committee, and request for an amendment in plan so as to ensure that the company rides the tide. We do not have an adverse impact on the company's operations or its security. Lastly, political or environmental scenario. We've seen over the last 1 year, there have been war situations. Last 2-3 years, there's been a pandemic situation which continues to impact various countries, including ours. So we need to be on top of things. We need to be aware as to what the company stands to lose if such risks were to materialize, and accordingly advise and tweak your plan. The audit plan is required to be amended mid-year. The communication from our side needs to go to the board, and only after approval is given by the management or the board, we should be making these changes. We cannot do it in a silo, because then it is a lapse in communication and it may go adverse at the end of the year. The main 6 stages are covered. I am now to my penultimate slide, again from my experience. Now, what are certain challenges in internal audits that can occur? Legacy practices versus documented SOPs. Now, in emerging corporates or SMEs, there may be a case that the person is heading the department for a span of 10 years, 15 years, 20 years, and has a set way of running things, set way of operating the department. Similarly, there may be people or staff in that particular department which is used to how the HOD runs. Tomorrow, if this HOD was supposed moves out for whatsoever reason, and there is no documented SOP in place, it will be a headless organization or a headless process. Now, how do you mitigate it? As internal auditors, let's stress on documented SOPs, documenting the process flow charts when the time is right, before it goes into an adverse or negative scenario. Hence, our role becomes very important at this stage. If it is not documented, it definitely is a challenge for us to be more alert, to be more adept in how we are mapping our walkthroughs and bringing out the actual practices in writing. Resistance to change. There may be a resistance to change because, again, like I said, if certain departments are used to running the department in a certain way, or used to how their promoters are dealing with them over a various span of years, it can come from various levels to us as auditors. It can be people from the HODs or the promoters also sometimes. Resistance to change the business process. They are not ready to change or add certain controls or certain maker-checker controls, for example. They are saying that we are in control of how we run the department, and we are confident that there is no risk to us. So for us to be looking at such processes in much more depth and much more in-depth analytical detail is very important. Internal audit is considered as a compliance requirement and a cost center. So unless or until you can bring out tangible aspects such as revenue leakages, cost optimization measures, cost control measures, and certain risks that you've seen in the previous slides, we will never be looked at as a profit center or a value addition center. So it is in our hands as to how we change the way we are looked at by various levels within the company. A challenge could also be a lack of top-down approach. Now, everyone knows Section 138, which mandates the company to undergo the internal audit. But if the topmost level is not interested in having an internal audit in its spirit, there may be a lax attitude or a very relaxed way of looking at things, as to us being just documenting our report and moving to the next process, and that's it. So it's very important for us as auditors to have a top-down approach from the management for us, our service to be more relevant and value added to the client. Pressure on audit fees at this stage, disparity in the work versus fees. Many a times it is adverse. So more the work, less the fees. So us as professionals, we need to be looking at mapping the same and not making the contract onerous, because then it's detrimental to our own interest as well. Focusing on financial audit instead of process or risk-based audits. It is a very traditional approach to be doing a ledger scrutiny, to be doing a compliance check only of transaction audit. Today is the world where you can take up processes or take up the risk-based audit approach by using audit tools. So the more value addition you bring by these methods, if you can bring best practices that you are seeing in your other clients in same sector, definitely that is going to be appreciated by the promoters, by the board. Unless and until we do that, it remains to be a challenge for us to grow as auditors. Investment constraints. Now, at this stage, you may suggest a lot of aspects to the company to upgrade the systems, to upgrade the ERP, to bring more tools. But if there are investment constraints at the company's end, it is always going to be a challenge for these to materialize. So then we have to use alternate audit procedures to ensure that at least our job is done properly and we are bringing out relevant advice as part of our reports. Precaution is better than cure. Our role, our essence of our role is precaution versus cure. If we can point out certain risks before they materialize and help mitigate the same, there will not be a case for them to go into cure stage at all. So let's concentrate on being in the precaution stage and mitigating at this point with root cause analysis. Staff loyalty, especially in family-owned SMEs or emerging corporates, the executive management or the HODs may know certain aspects which are adverse to the company's functioning, but they may not bring it out to the internal auditors as part of the walkthroughs, the interviews, the interactions. So at this stage, it is for us to be very skillful, to be very tactical, to bring out this information by the best way possible, because our intent is to ensure the company rides the tide always in a very positive way. So this is a challenge I have seen as an experience, which is why I'm bringing it out. And lastly, weak internal controls. So certain departments in emerging corporates may have very less people. It may have 2-3 people only, or 3-4 people only. So many processes within that department are given to these set of 2-3 people or 3-4 people. There may not be a situation where they can do a maker checker within the department. So here is where our role becomes important, because we as internal auditors can help set up the maker checker mechanism, and as part of our audit, a concurrent audit that we do during the year, we can bring out certain observations, anomalies, and help them close the loop in the best way possible. That is practically that which they can implement. So these are certain challenges that I've seen as part of my experience. And the last slide I'd like to move. Where are the areas where we can provide value addition as internal auditors? So as auditors, please concentrate on continuously updating your skills, undergo training, certifications. Now, if you're viewing this session, it is one step towards that, where you are trying to update your skills, trying to update your knowledge, which is a very good thing. Try to take up new certifications in the fields that you are, trying to build specialization in. Having knowledge of the recent government announcements which apply to the clients, be it MSMEs, SMEs, and various sectors. Over the last 2-3 years, we have seen there are various announcements, especially in the COVID era, for relaxation in TDS. There were amnesties announced. The Atmanirbhar Bharat package was announced. And in the last 2 years also, there have been much more schemes or subsidies that have been announced. If you can bring that knowledge to the board, and if they fall eligible within that subsidy or the amnesty scheme, there can be that benefit which the client can take. And definitely that is a value add, in my opinion, that you're providing to the client. Try to include niche areas such as subsidies, tax incentives, ESG, CSR as part of your audit scope. Now, everyone, as auditors, we are picking up, the finance area, the HR area, P2P, O2C. If certain these qualitative areas you are trying, or you can suggest at least to the boards or the company, and include at least in one stage, it definitely can be a good value addition, in my opinion, because these were, there can be some tangible benefits as part of subsidies which the client was not tapping. But if from your research you can bring it out, definitely value add. Try to map the SME's practices with the industry best practices. So in your tenure or your experience as internal audit in the sector that your clients are in, if you can bring certain best practices to the emerging corporate clientele or the SME clientele, it is definitely appreciated, and it will help them mature at a much faster level. Root cause analysis we've already seen. This will help us avoid repeat observations and provide practical observations which remediation can be done in its true essence by the company or the management. Try to shuffle the quarterly process audit runs each year. So suppose you're taking up sales in Q1 of a year, try to take it up in Q2 of the next year, so that if the business is seasonal, cyclical, or you can see various other aspects that apply that you may not have seen in Q1 of last year, but you may see in Q2 of next year. So try to do a shuffling within the year. Be a good communicator. As auditors, we are expected to present to the board level, to have discussions with process owners, management, board, audit committees. At each stage, the way we communicate has to be in a certain way, which cannot be common across the board. So please concentrate on your soft skills, on your presentation skills, and that's only going to help you be more relevant and be crystal clear in how you approach or how you communicate with these levels. As Pavin sir has also said, work not documented is work not done. It's very important for us to document each stage of the audit, working papers, be it the plan, the program, the observation control sheet as to what your sampling methods were, why have you not reported a particular observation, what were the reports or reportable observations that you brought out, what are the responses. 2 years, 3 years down the line, if at all you are asked to refer a particular report, these working papers is what's going to help you, show that you did your job properly and back then, and this is what our findings were, or how we have documented our audit work process. Look ahead, build for a better tomorrow. Today's emerging corporates are tomorrow's large companies. So the processes, if we can help them set up at this nascent stage of their life cycle, it will definitely help them in the future and make our role more integral in their growth as well. So it's very important that we suggest absolute best practices from a control perspective to ensure that these companies are robust from day one. Role of a trusted business advisor. Us as internal auditors are absolutely well poised to be advisors to the board. So it is in our hands how we change our image from being traditional or just internal auditors to being business advisors to the board, where our advice is sought on various decisions that the board has taken. So I believe internal audit is one function that is very well poised to reach that stage and offer valid management support or management advisory to various boards across the clientele. With this brings me to my last slide. Failing to plan is planning to fail is a mantra that we all as internal auditors must stress and implement in a day-to-day life in our clients. And this is a mantra that I've followed for the last 8-10 years of my career since I've become a chartered accountant. It's a famous quote by Benjamin Franklin. So with this, I end my session. I'd like to thank everyone for a patient hearing and hope there was value from my side, which you will take back home. Thank you so much.
Thank you so much, Samirji. We had a good session on how to plan the challenges faced, and especially the concluding part, you very nicely brought out the real issues that could be ailing the whole process in terms of how we look at internal audit. Thank you so much. Now we move to the next session, which is very properly coordinated and connected. First is what is the expectation that we're supposed to meet, then how do we plan to achieve the objective, and finally, when it comes to execution of the internal audit plan, then you look at the entity part. So when you look at the entity which is designed to make profits, then why are we looking at the environmental, social, and then governance aspect of it? And as an internal auditor, what will be our role in ensuring that the entity not only meets its commercial objective in terms of enhancing profit, increasing the share value, but looking beyond all that and then look at the society as a whole, how it impacts. And this is a very emerging area. And interestingly, I was just checking on what is the world view on ESG, and you will be quite surprised to know that the government of Florida and Kentucky in USA, they have not allowed their pension funds to follow the ESG approach in terms of their investment out of those pension funds, because those governments feel that it will impair the very objective of maximizing the profits if you focus on ESG. And we have all of that and then more to be heard further on this matter from Hina Kausar. I welcome Hina ji. She is again a chartered accountant with a commerce background. She's a partner of Guru and Jnana. And what was so impressive about her approach to the whole thing, that she says that her firm is a culture, it's not just an entity. And she has experience in terms of different industry coverage, starting from e-commerce, hospitality, education, everything that can be envisaged in the Indian environment and also in the commercial world. So without much delay, I request Hina ji have a very smashing session on the role of the internal auditor and the specifics relating to that on ESG. Over to you, Ji. Thank you.
Thank you, Mr. Balaji, for introducing me. Today, I'm going to speak about the internal audit. Before I just start, I'll present my screen. Just a minute. Is my screen visible?
It is.
Okay. Thank you, Mr. Balaji, for giving a brief introduction, and thank you for that. And I also thank the Internal Audit Standard Board for inviting me, and a special mention to Charanjit Singh Nanda sir, and also to the speakers today. It has been a great session by both the speakers, Samit Sharaf ji and Praveen Kumar ji. So today's topic, as you said, is little bit apt and continuing to the previous two topics, and little bit of an emerging topic which has been there and much spoken about. And so we've been hearing ESG. So this particular session today covers these topics. One is on the background and history of ESG. How did it come? What is its relevance? Why is it become more relevant now? Is what we are going to understand. Then what is ESG? What are the top 5 global risks which are there? Top 5 global risks. And then what are the strategies and positions which are there? And then we have what is the ESG reporting in India which is happening? Then what are the laws governing the ESG elements? What are the benefits which an organization would get by having the ESG reporting? And how can we implement it? So this is one part. Then we have, as an auditor, what is the role which we can play as an internal auditor, and how, as an auditor, we can suggest the company on better remedial plans for having the ESG. Yeah. So we've been hearing ESG quite often now. It is because of the regulations and other things which have been coming in. But however, ESG picked up the speed and momentum post-COVID. I'll just tell what is the sequence and other things. Currently, when there is a recent survey which has been done, out of which it has been saying that 9 out of the 10 corporates wants to participate in the ESG performance and show what their contribution is. And this is basically because of the pandemic hit and the kind of trauma which most of would have gone through the pandemic. And also in the next couple of slides, I'll tell what is it. But however, from where only very handful of countries were contributing to the ESG, August 21, 86 more countries joined the band, and then in the sustainability reporting. And it has become a global topic and a global reporting wherein ESG has happened. In India also, there's been quite a momentum, and then SEBI also has recently given that for the top 10,000 listed entities, ESG reporting, that is the business sustainability reporting, has become mandatory. So also there have been ESG stocks which are there, which are performing much better than the normal stocks. Why is it performing much better than the normal stocks also is in the further slides, which is like nice to know, saying that, why the stocks of the ESG listed companies or the ESG who have been implementing in these companies, why is it going high compared to the other companies as such? This is just a small roadmap of how the ESG has happened. Maybe in the 2004, the ESG has started, these talks have started as early as 1980, but there has been no momentum as such. Until in 2004, it became very much prominent, where the UN secretary sent a letter to 50 global large heads saying that can you have the ESG reporting and have the as a part of their corporate event. Then when 2004 they sent to 50, but in 2006 we can see that more than 3,500 corporates joined the band, and they were into the ESG. They had integrated already the ESG factors in their corporate decision makings. That was a big in a short span, in a span of 2 years, where 50 heads of the large global organization met to integrate the ESG. And in 2006, we see 3,500 corporates signatories have already approved ESG being a part of the corporate decision making. Then when the pandemic hit in, the entire thing became a little bit of this thing, and the corporates actually started emphasizing and knowing the benefit of environment, social and governance. And social impact was much higher because the entire was happening from work from home. So that is where it became very prominent. In 2020, when there were a lot of talks, it was also said, as I said, there were surveys wherein, every second company wanted to have ESG as a part of the corporate and take it as a part of the decision making in the and consider that as a part in the decision making of the corporates. And in 2021, 86 countries joined, and now there are a lot of focus on ESG. But coming on to India, where what I can tell is in India, ESG has come in quite in 2009 itself in the form of CSR reporting. When the CSR reporting, as we see, it was initially first only for the purpose of reporting, then a contribution, then notification started coming in, making it mandatory. But his corporate social responsibility in India started beginning by that only. And then that was the first step for the ESG from the legal and the regulatory side. Then we, even from the reporting framework, the business responsibility reporting, the CSR reporting, then the national guidelines on the responsibility of business continuity also gave a this thing saying that ESG reporting has to be there. And SEBI in 2021 told that top 100 companies, top 100 listed entities have to give disclosure in the financials about the ESG. And now in the 2000, the recent notification which is there from 100, it has moved it to 1,000. And for the financial year 22 and 23, top listed 1,000 listed entities have to actually issue a report on the business reporting and the sustainability reporting, and that has to be integrated at the time for this purpose of SEBI. This gives us what is the importance of ESG and how the reporting has to be there, and where as an auditor we can step in, because this is as a potential market where an auditor can add value to the organization and to the corporates to tell how they can benefit their organizations in there. Also, there's been ESG stocks which are there where many of the corporates have listed their stocks on the ESG, and investors also have been very, very focused now, rather than only investors seeing only from the financial angle, they're also seeing on the sustainability angle how much the company is contributing towards back to the society, and that is where ESG stocks have become more prominent. So as we are talking so much on the ESG, that ESG reporting has come up, ESG is the talk of the town. What is ESG? ESG basically is a framework designed and embedded in the organization structure that considers the need and the ways in which to generate value for the organization stakeholders. So basically, it is a framework which I can say, and it is embedded inside the organization strategy and considers the needs and ways in which it can generate value to the organizational stakeholders. So when I say organizational stakeholders, it includes both the internal stakeholders and the external stakeholders. Basically, when I expand it, ESG, E stands for environment, S stands for social, and C stands for governance. And we are very familiar with these words. What is environment? We all know. What is a social thing? We all know. What is the governance? Governance, corporate governance, we've been speaking from so long. So what is the new concept in this, and what is it is what we are going to see. So when I come and tell environment, what are the contributions of an organization or an entity towards this? That is the energy consumption, pollution, tackle the climate changes, waste management, or any other such kind of a thing. How has the organization contributed? When it comes to the social, that is the human rights. How does the organization treats its employee? How is its relationship between the internal and the external stakeholders? How are the health and safety of the people working in the organizations taken care? These are the kind of things which come under the social sector. Governance and the corporate governance has been spoken. It is the tone at the top. How is the quality of the company management? How is the board's independence? Do they have the independent directors? How often does the independent directors meet? How are the conflict resolved? Who gives the decision making? How is the board diversified? All this sort of a thing come under the good governance. So these three areas have come into and formed ESG. And ESG reporting forms an integral part. Going in the further slides, I would also bring into a few of the places where I will speak about how the organizations have embedded the ESG into their in there and implemented ESG, and then what are the kind of benefits it is reaping as well. So when I say ESG, it contributes three things. One, governance. One, the social responsibility. So when I put corporate social responsibility and the sustainability, I can tell we can do the ESG reporting. So when I say corporate social responsibility, I'm not talking about the contribution, which is a regulatory requirement, saying that if my profit is above certain percentage, above certain limit, then I need to contribute, then the company needs to contribute. That is a mandatory by regulatory. But here what it says, when I say the corporate social responsibility, it says what are the stakeholders engagement, how are the ethics and justice in the organization, how transparent the organization is, how the philanthropic thoughts are there in the company, how what is it contributing to the community, how are the employees treated in the company, how are the wellness of their employees taken care of. This is a sort of a responsibility which an organization has towards one, towards the society, second, towards the people who are working in that organization. Then comes the sustainability. So we see a lot of companies which are energy oriented, tech oriented. How are they doing? Even though we tell it's a not an corporate, like not a manufacturing entity which has an environmental hazards, but most of the companies use electricity, power, and other water and everything. But how are they doing to contribute that? So how is the energy and water efficiency taken care of? How is the indoor environmental quality? How are the waste management happening? How is the green cleaning or the purchasing carbon credit? If these two are taken care of from an organization perspective, then we can say that it is ESG compliant. Then what is the next step it has to do? The next step it has to report. So what is that? ESG has to be a part of management reporting. ESG has to be a part of the KRAs and KPIs of the members. ESG adds to the investment value, to the corporate governance. This is what is ESG all about. ESG is all about the contribution and giving back to the society. This is one of the chart which I could recently find it, and it's a very, very nice chart. I maybe like, if I can just tell how the countries or the thought has moved from past 10 years and how the trend has been changing is something very nice to see. If at all we see 2009, most of the thought process was on the economic areas, and hardly anybody thought of the environment or the societal thing, okay, or on the geopolitical. Nothing was there much. But as we move gradually, if you see here, in 2009, where only one pink color table is there, which is for the societal purposes, entirely it is on the and economic like clauses. So if I'll go 4 years ahead, and in the 4 years ahead, we can see a lot of geopolitical thing coming up, and then many of the economic areas were there. So there was no one who was talking about the environment in 2012 or 2009 or about the social contribution. Hardly anybody spoke about. Then again, coming on to the 2015, there are few societal things, there are few geopolitical areas, and then there are only an area where it is environment. Again, as we move ahead, in 2018, if at all I see, there are more of societal, environmental, and the geopolitical thing which is there. So the same scenario continued. Now, most of the thought process is on climate change. We see many organizations running for saving the environment, saving the soil, how to save the climate. We are all seeing the climate changes, and at least the seasonal changes which are there. Either it is too hot or too cold, and it is visible, and that is why there has been a lot of thought on the environmental and societal changes which is there. And particularly post pandemic, when most of the people were working from home, it was very difficult for organizations to see how can they take care of the workforce which is working from home. That is where the lot of thought process has gone into that, into the environmental protection thing, and second into the social thing. And obviously anything done has to be governed. If there is no governance, there is no goal or a roadmap towards that. That is when these three things put together hand in hand have given rise to the ESG as such. Moving on to this slide is in continuation to the previous slide, wherein again it shows what is the level of importance which has been given in 2022-23 for ESG, health and sustainability. Obviously, tech initiatives have been in number one, where 58% is been there for the tech initiatives. The next one is for the workforce, as it has become very, very critical, as none of the employees are becoming, like most of the employees working from home. The retention, training, hiring, and those kind of a thing has become much. And then comes the ESG. Obviously, the workforce retention, training, hiring is also becoming part from the social angle. But yes, that is also a different thing as such. That is why 52% of the people think that as a business priority, workforce retention is primary. The third point, which most of the organizations have pinned out, is ESG, health and sustainability. And that is where 32% of the people who are there into the business strategies say that it is very, very important for an organization to concentrate on the ESG. So now that we've spoken so much on the ESG, so what is ESG and how is the reporting in India? As I said that initially in 2009, CSR was one of the first step which has come in as a part of the ESG, where most of the many organizations come in the ambit. However, SEBI, in the circular which is dated 2015, initially gave the business responsibility reporting and reporting on the ESG parameters by the listed entities. Then going further, the business BRR got changed into the business responsibility and sustainability reporting, and it made mandatory that the top 1,000 listed entities shall replace the existing BRR with the BR and SR. Okay, so this is something which became a crucial change, and that is when it happened. However, positive thing is that not only these 1,000 entities wanted to go ahead and mandatorily disclose the reporting and what are the contributions they have done towards the societal. There are many other companies who did it at a voluntarily this thing. So because it is like, phase wise this thing, we may also say that SEBI may, or from the Companies Act going further, may tell, okay, the unlisted companies above certain limit have the business responsibility and the sustainability reporting, like how we currently do the CSR reporting disclosures. So the new BSR format, there is a guidance note which has come in. So these are all the regulatory requirements from the government. However, when coming to the ESG, what are the laws governing ESG in India, which is there? For the environment, there is an Environment Protection Act, Air Pollution, Prevention and Control of Pollution Act 1977. Then we have Water Prevention and Control Act. Then we have Forest Conservation Act or Biological Diversity Act or Wildlife Protection Act, which has been there. Then when they come to the Societal Act, there are so many labor laws which are there, which are actually protecting the workforce which has been working. So we have the Code of Conduct, Code of Security, Social Security, then Immoral Traffic Prevention Act, then Equal Opportunity Act. Then we have the Occupational and Safety, Health and Working Condition Code, Labor Code, which is there. Then the CSR reporting, which the company should have. When it comes to governance, there are a lot of reporting requirements which are there under the SEBI, FEMA, then the Competition Act or Industrial Development Act. These are few acts or the regulations which are binding on them. This thing. Moving on to this thing, what are the benefits which the organization usually will have because of the reporting? So what happens is when an organization is into the ESG and reports into ESG, it becomes like, talk of the town, and most of the companies, it will very help them advertise themselves, that saying that, this is the contribution which they are doing. What happens by that? the investors feel that yes, the company is making good, that is why it is contributing to the society, and it becomes as a company which is a reliable company. If at all anybody sees the Tatas or Reliance or anything, there's a sort of a trust with most of the companies which they have. This trust has come in not only because of their contribution to the business, but also their contribution towards the society. So once there is a visibility that the company has been contributing back to the society, there is a faith with the investors that the company is stable, it is doing good. The reputation and the brand and the awareness of about the company goes up. There is a talk of there is no negative publicity happening against the company. It has been there has been a positive publicity of the company which is happening. Obviously, all this definitely will impact the revenue numbers of the company. Also saying that, there is a talk for the good reasons for the company. So, what happens when the ESG reporting is there? The top line of an organization improves, definitely. The legal regulations of the legal have been met. If it is a company which is a manufacturing and there has been a lot of emission and other things, pollution which is there, is the company ESG compliant? Is it been reporting on the compliances? Does it has the parameters which it is going to achieve? If these are there, it is meeting all the regulatory requirements. There has been cost reductions because of the low energy consumptions. Infosys recently in his paper, it has told that it has met the ESG target which it had set for 2030. And what it has said, it wanted to have the entire energy consumption via the solar or any of the other things. And it has gone and implemented. And that is where it is telling that, we are ESG compliant. So what happens because of that? The energy consumption is less. The water, in fact, there have been a lot of companies which are working on the water conservation and other things. The first step starts in the organization. Many companies have done it within the organization itself, and then they have complied with the ESG. There has been reduced cost, and many of the things which are happening for ESG, there is a lot of employee involvement, which also gives a transparency in the organization, and the employees in the organization feel, yes, our organization is not only doing for us, but it's also doing for the society, and we are as a part of organization also giving back to the society. There's been a productivity uplift. There have been a lot of retention which is there post the ESG implementation in the organization. So having said that, this we spoke on the ESG and the benefit, but how do an organization implement it? What does it require for an organization to implement ESG? So when I talk about the implementation on the ESG, there are 3-step model. First, comply what is the regulation says. Then compete, wherein the leadership team involvement is there. ESG to be implemented, it has to be a top-down approach. The top leadership management should prioritize the ESG, only then will it happen. Once they get involved, then have it, then shape it up, and then have it as a part of the organization strategy. So these are the 3-step level which it is telling, saying that step up and step up and step up, and you reach to your ESG goal. So what is the ESG maturity model saying? ESG should be whatever the corporate strategy and the purpose is there. ESG should be driven. ESG should be a part. It cannot be a silo. Where an organization has a corporate purpose and a strategy, it cannot have a one more purpose saying that ESG we can. It has to embed ESG inside the corporate strategy. In the governance model, ESG has to become a part. In wherever the companies have a target, maybe a turnover, sales target or anything, ESG should become a roadmap towards that. Stakeholders engagement, ESG has to be there. At the end, once it is there, ESG as an impact can be measured. So how the organization, for example, wherever the organization strategy is there, when it is complying, a limited integration of ESG with the business strategy can be done. When it is moving up to the ladder to the compete stage, the leadership team gives priority to the ESG strategies, identify what are the implementation plans for an organization which it is going to take, and once it is there, and have the sustainability model and implement the ESG model which is there. Again, same on the governance. Okay, so governance, the leadership team initially says that, okay, maybe the CSR or any other foundation, it will have a goal. Then the senior management embeds that in the governance model and then have the initiatives wherein the ESG can be a part of the organization. Unless ESG becomes a part of the organization, it cannot be in working in the silos. Same with the target opportunities of the portfolio or sustainability reported. Wherever such kind of a thing is there, ESG has to be a part of the target. And then the leadership team has to focus on the uh, target oriented, what is the target and how ESG can be integrated. Only then it will have a profit, but having meeting the ESG target as well. Same when it comes to the stakeholders and engagement as well. Have the leadership team engages with the positive impact and then have organization let know saying that these are the ESG targets which are there, and have a public commitment saying that, most of the companies, there's a report which has been published by NASCOM recently. It's a very nice report where they have spoken to corporates across and have spoken saying that, what are their ESG parameters and how have they achieved. That is one of the nice reports which is there, which speaks various organizations what they have done. In fact, in the report it says that Manipal Institute has gone paperless. That is one of their objectives of contributing back to the society. In fact, I can proudly tell Guru Anjana is also paperless. And again, the ESG as an impact lever. I can and then have that saying that, what is the impact which is there on the society, or what is the kind of upliftment the organization has done. This is the 7th step to develop an ESG strategy. That is, conduct a materiality assessment. Then establish the baseline. So when we tell baseline, what does that mean? Baseline means identify the exposure and determine what are the most effective ways to mitigate those. This is one of the important step which is there. And then analyze the exposure from the risk perspective which is there. Okay. Then come and set the ESG goals. If at all we can tell, Genpact had set a goal by 2025 that it will be compliant with the ESG goals. Then Infosys had also set by 2030 that it will have the energy consumption to the minimum, but it has already met the goal. Whereas Wipro says saying that, employee engagement is their primary activity. And prior to COVID, they were all the employees engagement which is there in the organization. They had the in-house gardening which is there, or so that they are close to the nature. Then many of them, they had carpooling which is there, which is again saving of energy and conservations which are there. So that kind of small step, that side of steps were there. Again, when it comes to HCL, they had a target saying that, by 2030, they want to have they have selected 15 ESG parameters, and which is embedded in their code of conduct only. So when I say code of conduct, and entire these things are driven through the top management. So each of the organization has set an ESG goal, and towards that goal, they've been moving. Then analyzing the performance gaps. Okay, they've set a goal saying that, by 2025, I want to be in-house energy consumption has to be there. We have to be compliant with these 15 parameters. But if at all it is not monitored or seen where it is going, it cannot happen. Analyze the performance plan, gaps which are there. Then create an ESG plan. Only if the ESG plan is there, then only it will work. Then monitor the plan, implement the ESG plan in the organization. And then perform and again the reporting perspective. Wherever the top 1,000 listed entities are there, they have to anyways report it to the SEBI. So when they are reporting to the SEBI, entity has to report what is the entity overview of the entity's material ESG risk and the opportunities it has, and how is it mitigating the potential risk which it is foreseeing. Sustainability related goals and the target performance, this needs to be reported to the SEBI. When it comes to the environment disclosures, it has to disclose how is it mitigating the environment related disclosures such as the resource usage, air pollution emission, greenhouse emission, and so on and so forth. So these reportings make it very mandatory that the organization implement, monitor, and then see how it has been performing. So when the strategy is set, when the baseline is there, when the goals are set, when there is analyze, if there has been step forward where the performance ESG plan has to be monitored and the performance has to be evaluated, then comes the role of the auditors. So what is as an auditor we have to do? ESG is one of the nicest practice which is there, and it is new in the market. So the faster we gear up to that, we can actually catch the bus. So what is the role of an internal auditor on ESG? First, why? Okay, who validates the data and how is it reporting? So the primarily report, when I say ESG, as an auditor, we need to evaluate what are the potential risks which an organization is having. For that potential risk, is the organization having the mitigation plans? If the mitigation plans are there, whether it is actually going in line with the organization plan, and if there is a deviation, what is those deviation, and highlight to the organization saying that these are the potential impacts which are there. Okay, so these are the few of the questions as an internal auditor we may have to answer, saying that what are the now that initially change. Why does the internal audit fit into the equation I just told? Who validates the data? One, from the management would definitely like and would have to have the value on this, because this is the initiative which is driven from the top down of the organization, and hence the management would like to know how is it progressing, and where the internal audit report or the findings of the internal audit report and where would it get placed. There is a reporting from the regulatory requirement on in the ESG, that is on the annual report, sustainability reports, many of the media releases. In fact, there is a 49% increase compared to the earlier years on the ESG media publications, if at all it is compared to the earlier year, that is 2022-23. There has been increase by 49% of the media releases on the ESG. So it's a talk of town. And when the organizations which have implemented the ESG and the internal auditors who have been doing the audit and bringing it will definitely add value to that. And there are websites and the articles, blogs which have been there where most of this is spoken about. Internal auditor can actually support the management in answering the relevant question. Okay. Does the organization has a clear ESG risk plan? What is the kind of compliances which are there? In case, has it met the regulatory requirement of the organization? Do they have a proper ESG culture? What is ESG culture? It's a nice thing which is there. An organization, once it is implementing, it has to become a part of the organization corporate strategy. So when a company like Manipal says that they want to become paperless, or an Infosys says that they want to have the in-house energy, have to have the in-house energy consumption, and they don't want to outsource it and have so many solar panels, there has to be an education to the entire organization, saying that a small step will save. When a Wipro says that there has to be a carpooling, it has to be a joint effort of the entire organization. It is a culture building which is there. Entire organization has to speak the same language, saying that yes, we will do the carpooling. It cannot be people going hayway, then the results won't happen. So same day, that is what is there. It has to be a driven, and it has to be a culture which has to be there. As we many times we say that Tatas are known for the transparency and the honesty. That has come through a culture. So ESG, once an organization takes, it has to be a culture of the organization. How can ESG be measured? ESG can be measured by way of the KPIs and the KPIs which are linked to the employees, and then monitor the ESG progress on a periodic manner. In case there is a deviation with the management strategy or with the management methodology, yes, the internal auditor can raise the red flag and tell the reports which are there and identify also the potential risks which are there. So when I come, definitely as an internal auditor, we usually define what is the scope, execute, and then monitor. The same is the scope for the purpose of ESG also. So when it comes to the operational level, define what are the kind of organizational goals which are there. Culture and awareness needs to be seen. What are the policies and procedures which, as an organization, the company has implemented? What are the kind of sustainability risks? If a company of Mahindra and Mahindra, which is into manufacturing, the sustainability risk would be much higher than any one of them because the energy consumption and other things will be much higher, and the environmental acts will be more prominent on such kind of a company which is there. So as an organization, when we are doing the internal audit, we need to go through all of this to understand what are the potential risks as from the ESG perspective which the organization has. An organization which is more of an human oriented or lot of service oriented, where human resources become very much prominent, that would become as a potential area where the company can have understand where are the potential risks which are there, how as an organization they can bring in the culture wherein the risks can be mitigated, then have the audit tools and the audit and the monitoring and execute the work. Obviously, when it comes to monitor reporting and in my issuing management report will become a very, very prominent thing. However, as an internal auditor, it also becomes very important that we give the remediation or suggest the remediation to the organization for potential gaps. Because if we go and tell only the gaps to the company or the director, they may feel that we are only pinpointing. If at all it is told in a positive manner by suggesting the remediation methods, then it becomes more prominent. So again, when we are doing the internal audit, these are the steps which are there. Familiarize that team, have adequate training to the team on ESG because this is a new topic. The team and the way to audit this would be entirely different because whenever we do the regular financial audit or from the management perspective, the objective of the audit will be different, and hence training for the team becomes very, very important. Analyze the disclosures which are there, whether the company will be disclosing the same in the financial reporting. If so, what are the controls that are in place? If the controls are defined, whether the controls are sufficient, does the management require more controls to implement these strategies and the goals in the organization? Then offer the input, provide input on the potential risk indicators which are there, and identify what are the assertions which are very, very necessary for mitigating the risks which is there, and also consider the organization enterprise risk management process to understand how the ESG has been integrated. Review the report, determine how management has identified the key issues to be disclosed, have discussions with the management team, understand what is the objective of the organization in implementing an ESG, and then assess independently on a standalone basis whether the company's ESG objective, whatever is selected by the management, is robust, whether the company is having adequate controls to see whether the ESG plan which is to be implemented is going in line. If there are not enough controls or controls are there but not good enough to reach the goal, have discussions with the management and then guide what are the risks which are there, and also independently assess and tell the remediations which can be there. These remediations can be policy implementation or sometimes revamping the entire report and then seeing it from a new perspective which is there. So this is the new, the ESG has been a new topic and it has been a talk of the town which is there. And it is a potential thing where we as an auditor can step up and take the responsibility and play our part. Knowledge is very, very important. So the team which is going and conducting the audit, kindly we should train them properly, build the creditability, and have the ESG certifications which is required, so that when you take up the assignment, the management is actually aware that the team which is doing is a trustworthy team and they have the adequate knowledge, and it is a one-time investment. So whenever a now that it is a new thing, invest on the team which is there, who's been working, because only then you will get the potential output. Because it is a new thing, the guidance note has been issued by the institute on the same, on the reporting perspective, and very few companies are who are doing from which are regulatory required to do the ESG, but there are many companies which are voluntarily doing. So those we can play a part on that, and then get into and see how as an internal auditor we can add value to the organization. So these are the few of the challenges which the audit leaders are least confident in solving. In one of them are inadequate assurance over ESG. So if at all, we've been seeing that many of the organizations, wherever the audit, internal audit is there, and they have ranked it saying that what are the key challenges where which is there, where as they are not able to provide solutions or anything like that. So one of them, a major anyways, is the cyber security or the IT auditing practices, or attracting talent with non-traditional audit base. So one of them were like, inadequate assurance on the ESG activities as such. So this is a small presentation from my side on the ESG. Hope this is helpful for you. Though I think I stopped it 15 minutes earlier than scheduled, but I am happy to take up any questions on the ESG. And this is a new topic which is there, and this topic, and for the purpose of internal auditors, is a very potential and a hot thing which we should step up and take this opportunity.
Thank you so much, Nyaji. It was a wonderful presentation as to how we should ensure that we respect that we are part of this earth. And then as we grow professionally and commercially, we should always have the foot firmly perched on the ground and make it more green than it was when we came into this world, and ensure that the next generation also enjoys the beauty of the nature at the same time giving them the comforts of life. So it was a beautiful blend of our responsibility as a professional, as well as the organization's ability to make more profits, as well as ensure that what they took from the nature is at least put back, so that there is something left for the future generation as well. Thank you so much. So now coming to the questions, I will just read that question which has come from Harpreet Kaur. The question is relatable to you, Hinaji. How can we measure ESG on performance of company? Please throw some light on this.
So most of the organizations, what they have done is they have selected few of the ESG parameters. As I said, like Infosys, which is there, they have selected the ESG parameters, saying that they want to be energy sustainable by 2030, and this is the roadmap. When it comes to HCL, they have 15 parameters which are there. These parameters are decided based on the company, what kind of contribution they want to make. However, there is no hard and fast rule saying that these are the parameters which they need to do. But then, but they need to where the regulatory requirement is there. There, the company needs to give a disclosure of what are those contributions that needs to be made. Still, the RAW is not very much regulated in these sectors, but wherever those parameters have been chosen, the company that needs to be evaluated.
Okay, thank you. Now there is another question whether we need to follow ISO 14064, which is talking about this is part of the international series of standards for environmental management. So the question is whether that 140, it's basically on greenhouse effects and other thing. So is there a specific requirement to cover the ISO standard 14064? That's the question.
I'm not sure on that. I can check and come back.
Yeah, the way as I see it, there are so many regulatory framework in terms of ISOs being done, but then what we are talking in terms of ESG for the company and ISO could be much different. So that question has come from
Somdev Bhattacharya. Then, as part of ESG implementation, what are the challenges generally faced by the corporates? Like the way I just told you, Kentucky and Florida government, they have directed the pension houses not to follow ESG because that impairs the profit-making motive of those pension funds. So, likewise, this is the question from Mr. Ganesh. Please throw your light on that.
See, what happens is maybe if you can just repeat the question once, please.
Yeah. As part of ESG implementation, what are the challenges generally faced by corporates?
ESG, as I said, it has to be a culture of the organization. Any new thing which is there is difficult to be implemented initially. And this, when it is taken, and it is the first year of implementation in India. So definitely there are no papers which are there, excepting to few of the reports which has been published from NASCOM, where the companies who have voluntarily implemented have given their feedback and other things. But where I potentially see is first the identification of what is the ESG parameters which are there and what are the kind of things that the company will implement. That would be the first challenge. And second would be how it can be embedded into the corporate strategy. And once it is embedded, whether these strategies, how it can bring down to the top-down approach and bring in as a part of the organization culture. So that would be the biggest challenge which is there. If at all, we can say as the Wipro, one of the thing is they went ahead and did the carpooling to save the energy conservation there. So if that is becoming a part of the organizational objective, then how is it percolating down? And how is it told to the last person would be the biggest challenge for them to implement. And many of the companies, what they have done is they've selected 4 or 5 parameters, ESG parameters, and have given a roadmap saying that we will achieve this by 2025 or by latest by 2030 or so. But in this roadmap, like what are the steps which they are going to take? And that would be the biggest challenge, I feel.
Okay, one more question for you. One person has asked, Mr. Rajesh Kumar Gupta, green cleaning in ESG, is it relevant in the topic that we're discussing? Green cleaning?
No.
Okay, thank you so much. So there are some other questions relating to fraud, but I think the speakers are not there. I will just quickly take one particular question to generalize the most of the questions which have come. It's basically saying, as an internal auditor, is it our responsibility to discover fraud? So I would think that it's not our responsibility to discover fraud, but then it's like a life process. The moment we identify fraud, it has to be brought out and also advise the entity to create systems where frauds do not take place. Of course, the person who creates fraud are more intelligent, more creative than the systems that we create. That's how frauds take place. But then the role of the internal auditor is on a live reporting basis where they are, as I said in between the movie Minority Report, where the police goes to the scene before the crime takes place. They use some intelligent methods to, that's of course a science fiction movie talking about the future where crimes are stopped at the time it's happening. So maybe we should also have something in place for the internal audit system along with the artificial intelligence and other capabilities to envisage a fraud.
Internal auditor cannot be a fraud finding or, like how you're telling, he is like a person who goes and then fights the fraud. Internal auditor will identify what are the potential risks which are there in the organization. And if there is any control which is there, wherever controls are not there, the work of an auditor is to highlight that to the management that there is a potential threat which is there. Or investigate much further and tell, okay, saying that there is a threat and how can an organization can deep dive and find out if there is a fraud. If there is something very much visible saying that, yes, there is something which is happening, or if at all, for example, as Pravinji was telling, there are many times when we do in the internal audit, we see saying that, the same, if it is a logistic company, to and fro fare is been fluctuating. Then we know that, okay, how can it happen for the same kind of vehicle? That gives rise to a suspicion. We cannot go behind to find the fraud, but we need to highlight that to the company, saying that yes, there is a potential risk here.
Okay. Yeah, thank you. So I think we will now go to the concluding part to give a vote of thanks and concluding remarks. Gyan Chandra Mishraji is not available now. So probably, if Sabu sir, you are there? Yeah, okay. So it was basically a well conducted thing in terms of the paradigm shift. We need to understand that the data given to the statutory auditor becomes quite redundant in terms of management's ability, because we need to understand statutory auditor basically reports the owners or the shareholders, whereas the internal auditor works closely with the management, and that is more to the event that takes place, and the time frame from the time when it takes place and it goes to the management is much less in terms of the elapsed time, so that they take meaningful decisions based on what the internal auditor does. So internal auditor basically works along with the management and also helps the shareholder values to be upheld in a manner where they wouldn't allow the promoters to tweak the system and then swindle money, or ensure that the reporting is quite fair. Even though they are appointed by the management, the larger role of an internal auditor still remains with the corporate goal as such. So with that, we come to the end of the session. I wholeheartedly thank the opportunity given to a very small branch like Kottayam in the south of India to have the privilege of being given the honor to conduct this, and for which I have no other person to thank, and other than the benevolence of Nandaji. Of course, the entire team from the internal audit board was very cooperative. Shivani ji for giving us the information relating to the conduct of the event and everything. And we had a huge audience. It was quite surprising. We had about 1,800 people attending. So that shows how important this meant to the members. As you would see that our institute was doing a fantastic job by including both the internal audit aspect as well as the statutory external reporting held under one umbrella in a beautifully blended manner, where the members are benefited from one qualification and doing two vertical related services. So we thank our institute and everyone who attended for this wonderful evening. Thank you so much. Good night to all.
Thank you.